Morning, Andre. Can you please do a roll call? Are we co-reading?
Okay, we're correcting, but we have no one of the TTSA on the platform yet, Chair. But shall I do the roll call in the interim, Chair?
Yes, please.
Okay. Mr. Dr. Kigaba,
I'm present, thank you.
Mr. Chance,
I'm present, thank you.
Ms. Mosikatsi,
Present, thank you.
Mr. Tambo, Mr. Tambo joined us earlier, Chair. Mr. Mdluli,
I'm present.
Chair, we correct, but we are having a challenge with the officials of TTSA who's joining us as we speak, Chair. Thanks.
Yeah, don't play with our title. This thing of Mr. is for me and Mr. Chance. And when you call Gigaba, you must call him Dr. Gigaba.
I did, Chair.
It's a very expensive title to be Mr. It's not for
No.
everyone. Please.
We won't miss that, Chair.
Okay.
Chair, we will be joining by Mr. Gama and Mr. Thring, Chair, as we are talking.
Thank you. Why is the DTI late?
I'm not so sure, Chair. We have sent the new link, Chair. So, Ms. Matumela is on the platform, Chair.
Madam, why are people late at the meeting?
Morning, Chair. Sorry about this. We received two links from the Secretariat. We used the first one, we could not go in, so we used the second one, and that's what led us. We're getting all the entities to join, Chair.
Okay. We'll give you another 5 minutes. Thank you. Andre, you'll indicate once all people have joined, have come through so that we can proceed.
I'll do so, Chair.
Yeah, no, we can start, yeah, sure.
Chairperson, everyone is on the platform. The department is led by Ms. Matumela, Chair. Thanks.
Thank you very much. You are all welcome, colleagues. Are there any apologies?
Chair, I have not received any apologies. The apologies may still come in, Chair, but I think Mr. Mukutu is maybe joining us later, Chair. He's in another meeting. That's the only one I have, Chair.
Okay, thank you very much. Can we get the mover and seconder for the agenda?
I move that we adopt, Chair.
Thank you very much, Member Mdluli.
I'm seconding, Chairperson.
Thank you very much, Member Mtsikadzi.
Sorry, Chairperson. Just before I put my hand up, I wasn't recognized.
Oh, sorry.
The matter we discussed yesterday doesn't appear on the agenda.
Okay. Are we able to add that matter so that at the conclusion of the presentations, we can then have a 15 minutes or so just to deal with this other issue?
We can, Chair, as committee business, Chair, we can add it at the end of the Q&A for NEF, Chair.
Okay, let's do that.
Thank you very much.
Okay, thank you. We thank you very much, colleagues. I think we are now fine and ready. So everyone has joined the meeting, right?
Correct, Chair. Everyone is joining the meeting, and Ms. Matumela is leading the delegation, Chair. She will do the introductory remarks, Chair, through you. Thanks.
Okay. Thank you very much. The purpose of the meeting today is to receive the briefing from the IDC and NEF and to engage them on their financial and non-financial performance for 2024-25 financial year. This is so that the committee can assess the performance of the National Department against the resources allocated in terms of the Section 5 of the Money Bills Amendment Procedure and related matters in terms of Act 9 of 2009. I will now allow the acting DDG, Matumela, to introduce the team and to proceed with the first presentation. And then we'll engage it and then take the second presentation and then engage it. Over to you, Madam. Thank you.
Good morning. And
recording in progress.
The honorable members. Chair, I would like to submit an apology on behalf of the DG, Chair. We also just want to apologize for the glitch that some of us experienced in joining. Chair, as always, we thank the committee for the opportunity to engage. We value these interactions with the committee. Chair, from the IDC side, we have the CEO of the IDC, Ms. Nahoshi Likete, and she is with her executives. Chair, she will introduce the executives when she starts with the presentations. And from the NEF side, Chair, we have the CEO of the NEF, Mr. Mziwabantu Daimani. He is accompanied by some of the board members as well as the executives, Chair. And he will also introduce the team when he starts with the presentation, Chair. Thank you.
Good morning, Chair. Can I start?
Yes, you may, CEO.
Thank you, Chair, and good morning, Chairperson and members of the Portfolio Committee. Let me just start by thanking you for the opportunity that you've presented us as the IDC to share with you the IDC's annual results for the year ended 31 March 2025. This engagement is an important opportunity for us to reflect on our performance and reaffirm the corporation's role in advancing South Africa's industrial development agenda. The year under review was marked by significant challenges. Global geopolitical tensions, trade fragmentation, and subdued community prices continue to weigh heavily on the economy. Domestically, GDP growth was marginal at 0.4%, while total fixed investment spending declined by 3.9% year-on-year, underscoring a cautious investment climate. Against this backdrop, the IDC's role as a counter-cyclical investor and catalyst for industrial development became even more critical. Despite these headwinds, the IDC remains steadfast in its mandate to preserve industrial capacity, stimulate investment where the market hesitates, and drive inclusive growth. Working in alignment with the DTIC's policy priorities, the corporation implemented strategic interventions in sectors such as steel, sugar, and automotives, safeguarding thousands of jobs and ensuring continuity in key value chains. Chair, as noted in the discussions that you had with the DTIC last week, I just thought that I share with you the progress that has been made in filling board vacancies at the IDC. In June, as the IDC, we welcomed Ms. Gloria Sirobe as the new chairperson of the board, along with new members, Mr. Rion Barnard, Ms. Tanya River-Cohen, Ms. Ayanda Dlodlo, and Dr. Kitumets Imutibedi. On October 24th, Cabinet announced the appointment of 5 additional directors, Ms. Trifosa Ramano, Ms. Andre Kriel, Ms. Busi Mabuza, Mr. Brian Dames, and Advocate Tandi Olaine. And as the IDC, we're quite pleased with this, as these appointments will ensure continuity in governance and strategic oversight. And having said this, Chair, I would like to take you directly to slide number 12, which talks about the performance of the year under review. Apologies, slide number 8, Chair. I would like to start there with the committee. So as I said, the environment was quite tough for the IDC in the year that passed. However, despite this tough economic environment, the IDC was able to increase its disbursements to 16.3 billion, up from 2.5% from the previous year. The IDC was able to create jobs and save a total of 15,732 jobs. Our transformation funding rose to 26.6 billion, and we continued to maintain a strong asset base of 144.3 billion rand. The next slide, Chair, slide number 9. In keeping with our mandate, the bulk of our funding has continued to support startups. So 5 billion rand of our funding went to startups, and 4 billion went to expansions. At the same time, we have continued to play a counter-cyclical role in supporting sustainable businesses in distress. And there we were able to support these businesses for 2.2 billion rand. The next slide, slide number 10, Chair, speaks to our special distribution of IDC funding for the year that passed. And you will see in that slide that KwaZulu-Natal received the highest funding at 3.64 billion. And it continues to rank among the top in approvals, and followed by the Northern Western Cape, and Limpopo and Northern Cape have received more funding, and the Eastern Cape, Chair. So that slide shows the special distribution of our funding. Transformation, Chair, continues to be key for the IDC. Outcomes and the outcomes of our funding is that in the year under review, we managed to do a total transformation funding amounting to 26.6 billion. And of that, Black industrialist funding rose to 23.4 billion. Youth entrepreneurship funding totaled 1.7 billion, and funding for women empowered businesses totaled 5.6 billion. Our portfolio share continues to grow, and at the moment, our portfolio under management is 93 billion, of which 11 billion is located across the continent. And our portfolio is composed of 76% debt and 24% equity, reflecting a strategic use of risk-bearing capital to support growth sectors. Over 94% of our investments are aligned with our industrial policy priorities, and those focusing on manufacturing, mining, energy, agro-industry, and in infrastructure. I just want to take you back, Chair, to slide number 10, which I have skipped, which basically shows the special distribution in terms of the main metros and outside main metros in South Africa. So you'd see there that in the main metros received a bulk of the funding, and outside main metros were able to invest up to 5.863 billion rand, which was directed to projects supporting rural and regional development. The rest of Africa received funding of 875.9 million, which has been invested in projects across the continent and also aligned with the Africa Continental Free Trade Agreement and our regional value chain strategy. At this point, Chair, given that the year under review ended in March, I would also like to ask the Chief Financial Officer, Mr. Isaac Malevu, to present a review of our financial performance for the year, for this year ended March 2025. And I will come back to just talk about the first 2 quarters if the Chair and the committee so obliges us to. Isaac?
Morning. Thank you, Chair. Good morning, Chair of the Parliamentary Committee, and good morning, members of Parliamentary Committee. As the CE alluded, I'd like to walk you through our financial performance. It has been a tough economic environment with muted commodity prices. You will note, Chair, that our financial results present a reduction in our operational profits. And this, Chair, is on the back of low earnings, high impairments, cushioned by adequate capital reserves. The low earnings really come from operational challenges experienced by our investment companies that pay dividends, weak earnings from our subsidiaries and associate companies at a group level when we consolidate the profits from subsidiaries and associate companies. We are pleased, though, Chair, that we did see an increase in the interest income on the back of our growing loan book. The high impairments, which is a topical issue on our results, is really because of our strategic intervention. In particular, there is a client in the steel manufacturing sector where we advanced about 1.7 billion. And it's really to intervene to preserve the manufacturing capacity and to support the downstream steel sector. But we also saw an increase in a number of our business partners who are in distress. And because of IFRS 9 or because of the accounting treatment, we have to take a forward-looking view and take the pain now. So we did increase our provisions, which is reflected in our financial results. We are pleased, though, Chair, that despite this reduction in profits, our capital reserves remain strong. Our debt-to-equity ratio in terms of our borrowings compared to our reserves is sitting comfortably at 33%. We have a headroom up to 60%. We do have adequate cash buffers. Our liquidity is still strong, and access to the banks or capital markets is still strong. Chair, the next slide, just to walk you through just the highlights, Chair. I did talk about the reduction in profits at 1.8 billion, revenues reduced by 11.3% to 11.7 billion. And Chair, we always make a point that about 40% of our revenues is coming from our dividend income, and the rest is interest income and non-interest income. Cost to income ratio at a company level, which is really a measure of are we operationally efficient? We still are, Chair. We can see that our cost to income is below 40% at 30.8%. Of course, Chair, the biggest concern is the impairments, still high at 30.6%, the non-performing loans ratio at 41.7%. And Chair, I did mention that when you consolidate the subsidiaries and associate companies at a group level, revenue is 21.7 billion, and the biggest part of it is Fosco. Profit after tax reduced by 95.6% to 329 because of the factors I highlighted earlier on. Our total assets, Chair, at the group level remain strong at 134.5 billion, reserves at 94.1. Our borrowings remain muted or low at 31.1 billion. Chair, the next slide, just to help the members to appreciate that if you were to exclude impairments, so profit before impairments, what will that picture look like at a company level and at a group level? At a company level, you can see, Chair, that our profits are 6 billion compared to 7.2, which means a reduction of about 15%. At the group level, the profit before provision is down at 30%. But once you include the impairments, then the picture changes. And when you include also the associated income, the picture changes. Thank you. Thank you, Chair. So the next slide, Chair. Thank you, Chair. I want to just the point I'm making here, the impairments, profit after impairments, then the reduction is even marked. But when at a group level, when you take into account income from associate and profit from discontinued operations, you realize that the losses even increase, rather the profit decreases further. On the next slide, Chair, really just to show that the quality of our book is still reasonably good in terms of the performing at stage 1. Stage 3 is the non-performing. So stage 1 and stage 2 is really the assets that are performing. On the next slide, Chair, we always make a point that we are adequately covered, so there's no further pain we expect on our provision, on our impairments. We've taken as much pain as we can in terms of our coverage ratio sitting at 65% for stage 3. On the next slide, Chair, we make a point that our non-performing loans are lumpy and chunky. The top 5 of the non-performing loans account for more than 50% of the total non-performing loans. And the first one, Chair, is a mining company where we own about 20%. It's a manganese mining company. This is one of the best manganese assets in the world. The challenges we have there, Chair, is to get the project to be fully completed and to manage some of the disagreements we have with the controlling shareholder and in terms of how to resolve some of the technical and management issues that are being experienced to bring this asset to full optimization. The second one part, Chair, is that investment, strategic investment I referred to, which is a steel-making company in Newcastle that we supported, and we had to, again, declare as non-performing given the distressed nature of that company. Company number 3, or business partner number 3, it is also in the steel manufacturing sector. It's a company we've been supporting over the years that have been experiencing some challenges. Business partner number 4 is an asset which is actually performing. They're just having challenges with converting their local currency into the dollar currency so they can repay us. The last one is a hotel that we funded in Uganda. which we currently are exiting. So that, Chair, just gives you a picture that by and large our book is a quality book if you exclude these top 5 non-performing loans. Chair, the next slide is really just to remind the members of the Parliamentary Committee that is a Schedule 2. We fund our operations through internally generated cash flows, the profits we make. Where there's a funding gap, we do go to the debt capital markets. We borrow from the local banks, international banks. We also issue a paper in terms of bonds that are listed with the Johannesburg Stock Exchange. And that, Chair, really funds our operations and enable us to continue to support our developmental mandate. Chair, the next slide, I think, just really to give members a picture of the sources of funding. Just to give you an example, Chair, our funding gap is normally about 30% of our ambition in terms of what we include in our corporate plan. So, for example, this year or next year, we're planning to disburse 20 billion. So 30% of the 20 billion will be coming from either local banks, international banks, or issuing of bonds. The next slide, Chair, is just really to give you a picture that our borrowings are well managed, the maturities on it, so the risk of us not being able to repay these loans is low. The next slide. Chair, just really my closing remarks to echo what the CE said, that our loan book continued to increase. Interest income was better. We are concerned about impairments. We'll continue to manage. We have specific strategic interventions to manage these impairments, and we'll start with the top 5. In fact, we have a top 10, Chair, that we are targeting, and our goal is to deal decisively or resolve these top 5, and that we believe will help us reduce the impairments. Chair, I'll pause here and hand over to Piwe, my colleague. Thank you very much.
Thank you, Isaac, for that. So, Chair, through you, and good morning to yourself and to the members. Mine is just to walk the committee just through our key performance indicators that characterized the year that we are reporting against now. Again, Chair, just to underscore what the CEO Mahoshi emphasized earlier around transformation remaining a key outcome for all that which we do. And so to that end, Chair, I think the past year, certainly, I think, saw that as a distinct area of performance with transformation funding significantly exceeding the target that we had set for ourselves, committing to 26.6 billion against the target of 17.5, Chair. So that's just something that I wanted to highlight, I think, as a key achievement from the year that we've just closed. In terms of just the slide, Chair and committee, obviously, just in the ambit of our transformation funding, just to remind the committee, it's obviously our support to Black industrialists, youth entrepreneurs, and broad-based empowerment initiatives, Chair. But what we also just want to highlight from this slide, Chair, is just our ability to surpass our leveraged co-funding target, Chair, for the funds that we were able to mobilize from other lenders. So that is core to expanding our reach, Chair, as it were. So we achieved 31.9 billion compared to a target of 29.4 billion, Chair, which I think, as my colleagues have indicated, really does underscore the catalytic role that IDC plays in the market in attracting private sector investment to augment its capacity as well. We also, in respect of manufacturing output growth, Chair, this target, or KPI rather, looks at the portfolio of companies that then recorded an increase in sales That's what we track. So, which from the year that we are reporting was well above the minimum inflation-linked target, Chair, of 3%, which in all intents and purposes signals progress in localization and beneficiation, Chair. Another key area of focus over the last 3 years, Chair, since we've decided to express ourselves more deliberately, is in respect of project development, Chair. We also did exceed expectations in this area insofar as our ability to advance key projects from project prep, Chair, to bankable feasibility. This is expressed obviously in the 15.7 billion worth of projects that have been graduated versus a target of 4.8 billion, Chair. And this again demonstrate the commitment, certainly from the committee, for IDC to play a more leading role in catalyzing particularly critical minerals, but also potentially new industries, as it were, Chair. So we've reported previously around what it is that we are doing here, but it's just again to give you comfort that it is pulling through in our efforts, and certainly I think investments, as it were. Where we did not meet expectations, Chair, it's in respect of total investment flows facilitated. So we was just shy of the 54.9 billion target that we had set ourselves, achieving 51.2 billion, Chair, just slightly below the mark there, as well as on balance sheet disbursements, Chair. I think the CEO did highlight earlier that we did 16.3 billion, short of the target that we had committed ourselves of 21.4. Again, I think to your point, Chair, it's underscored by the broader operating environment that the CFO and CEO alluded to, and really just the shyness of private sector to invest. But hopefully, I think with improved confidence levels in the economy, we should see a shift, and certainly I think an appetite, certainly for our funding going forward in time. The jobs target, Chair, we obviously track jobs, new jobs and jobs saved. So that has continued to be a target, to be a challenge, and something that is a core outcome in our activities, Chair. So we were just shy, significantly shy of the target that we had set ourselves of 34,000 jobs, Chair, only achieving 15,000 jobs for the year under review, Chair. And perhaps just the last one is grant-related jobs on this slide of the KPIs. Again, I think only achieving 5,800, Chair, against a target of 8. So that's really what I wanted to highlight on this one, and perhaps maybe then just the next slide, Chair, of our KPIs. Here maybe it's I'm not gonna lift the financial performance indicators, Chair. I think the CFO did make reference to payment ratio and NPL, and did give at least the committee some color in respect of how we fared. And certainly I think some of the challenges with some of the significant counters, Chair, that we are making progress and experiencing challenges, I think, in respect of Fosco to a certain extent, and cast products, and reference was obviously made to our manganese investment. And I'm not going to go into that detail. In terms of really just operational efficiencies, Chair, this is certainly the priority of the CEO to really get the business to significantly make headways in respect of our turnaround times. And certainly that speaks to our internal digital transformation journey, Chair, to really bring in these efficiencies so we can make progress in terms of how our clients interface with ourselves, Chair. But really, in summary, Chair, despite or notwithstanding the continued challenging operating context or conditions and the low growth environment, as the CEO did indicate, Chair, IDC has continued to play not only a counter-cyclical role, but certainly I think as would have come through in the portfolio, we've continued to support a bulk of our funding has continued to go towards startups, Chair, and expansions, so which augurs well with our mandate, Chair, and certainly I think aligns with our focus areas to the extent that we support sustainable industrial, sustainable industrialization, Chair. So I just wanted to focus on that, and with obviously a lens in supporting deindustrialization efforts, but really the bulk of our focus areas is in new capacity or supporting the expansion of existing capacity, Chair. So I think I would like to leave it at that, and certainly I think going forward we will continue to express ourselves towards new industries, and certainly I think supporting the country's priorities insofar as transmission agenda, and certainly critical minerals. And so you'll see a lot of emphasis and focus in so far as our project development is concerned, Chair. So thank you. With that, I think I'll leave it at that and hand back over to the CEO.
Thank you, Piwe. Chair, this is our presentation to the committee. And as I said at the beginning of my comments, that we are happy to give you a sense of how Q1 and Q2 has been for us. And so I will run very quickly through that. And we recognize as the IDC that we've had a slow start to the year. Quarter one and quarter two does show some improvement. With the measures that we've put in place to really try and close the gap between where we want to be and where we are now. And a big focus, Chair, for us is going to be on ensuring that we achieve our KPIs. And our KPIs rose between quarter one and quarter two to 31%, so doubling the target that we reached for quarter one. We are enhancing our operational efficiencies and strategic execution to ensure that we continue to play that a counter-cyclical role as an investor, but also making sure that we support new industries while trying to help those that are in distress. We also recognize that as the IDC, we need to be more adaptive to improve our partnerships with others, because I think if there's one thing that we've learned is that we are not a lender of last resort, Chair. We are a partner, and we recognize that there are others in the space that we can work with to achieve our goals. So that is what we will be focusing on in partnering with other entities to ensure that we are able to grow our book and also to meet the targets that we've set ourselves. So in closing, Chair, as I said, our first half of the financial year and the second half reflect some encouraging progress in our operational momentum, aligned to our strategic priorities. We have a strong disbursement performance and pipeline that we believe will help us deliver our development mandate, despite the persistent challenges that we are facing, especially in the area of unemployment, in job creation, and as the CFO has mentioned, our portfolio quality. I believe that with focused execution and proactive risk management and strengthened partnership, the IDC is well positioned to accelerate impact in the remaining quarters and advance our commitment to inclusive, sustainable industrialization. So looking ahead, Chair, our priorities remain the same. We do see the Africa continental strategy providing us opportunities to deepen regional value chains. And that's what we really want to do, because we recognize that our business partners have to look for markets elsewhere, given the tensions that we find ourselves globally with tariffs having just increased the cost of doing business for our global partners. So we are involved and support the initiatives by the minister to look for markets elsewhere, and we're a strong participant in doing that. And Chair, in Annex Chair A of the submission, we have provided reference cases of funding activities and the related impact that we would like to share with you. And in closing, we would like to thank you for your continued support and guidance and providing us this opportunity to present our results to you. Thank you, Chair.
Thank you very much, CEO. I'm sure we can now engage colleagues, and then we'll just take the next presentation after. So I think it is important that to engage each entity separately. Andre, you'll help me with the hands from the
I will
colleagues.
do so, Chair.
Thank you. Colleagues, the floor is yours now.
Mr. Chance, Chair.
Member Chance.
Chair, also note my hand, please. I'm
Ms.
struggling to raise it.
Yes, you'll be second, Ms. Musagazi. Thank you. You can proceed, Honorable Member Chance.
Thank you very much, Chairperson, and thank you to the CEO and your team for the presentation. Clearly, there are some headwinds that you're dealing with, but that's nothing different from what the economy is dealing with more generally in an environment where we have minimal growth. So I do understand the challenges you're facing. And as you pointed out, and I think on your last slide, operational and strategic challenges need to be addressed. So that would be my first question. I mean, I suppose you did refer to them somewhat earlier on, but operational challenges maybe needs to be looked at in more detail. That you could just give us a bit more insights into what those operational challenges are. You did mention turnaround times and improved digitization of efficiencies or processes. So that's maybe something you could elaborate on a little bit. I'd like to know, at what point do you actually book an impairment? This is a question aimed at Mr. Malevu. Because if you look at the manganese project, if that business is still active, or at least it's still going, why would you book an impairment? So that's the question that I have. Then when it comes to your counter-cyclical strategy, we've had this discussion before in most of our meetings, the extent to which you balance your counter-cyclical strategy with your investment in growth businesses. And obviously the big question, you were rather coy about mentioning the steel company. We all know it's ArcelorMittal. And the fact that I'm concerned about is that you threw this money away. It was pretty obvious that they were never going to save that business. I mean, years ago, it was obvious that they were never going to save that business. And you've basically saved the shareholder, Mittal, ArcelorMittal in the Netherlands, 1.7 billion minimum. So I really have to question, was there a political imperative here that you were trying to address? Were you being strong-armed? I mean, the board of ArcelorMittal has some pretty powerful people on it, powerful people in the ruling party, or at least the governing member of the governing coalition. Must political interests be the guideline for you to make these investments? Or not really an investment, it was just a bailout. And now we have a situation where some unions are calling for this business to be nationalized, going on the route, for example, of British Steel. What is your view on that? Do you believe that there is any purpose to be had in in nationalizing ArcelorMittal? And could you maybe give us some updates, obviously without revealing any confidentialities in terms of the negotiations, in terms of the potential buyout of ArcelorMittal, and the refloating of the Saldanha plant? We were down in Saldanha a few weeks ago and we saw this huge mothball plant. And again, it comes to the question of, you have a multinational that essentially buys a South African monopoly, which was Iscor, turns it into a national private monopoly. And the Saldanha plant, it seems to me, was sacrificed so that it could keep its businesses in India and Brazil going nicely. And we suffer from that. So again, strategically, how are you avoiding these risks? That you are really just a price taker, as it were, as opposed to a price maker in terms of your strategy. Then I think we need more information. Maybe it is in the presentation, which I haven't really had a chance to look through in detail, on the longitudinal stats from your investee companies. How many of these, I mean, what are the businesses doing individually, performance-wise? It'd be interesting to drill down a little bit to get a sense of how much these companies are performing. Do you have any real high flyers? You haven't really talked about the high flyers. Are there any high flyers? Again, the question of jobs saved versus jobs created, you didn't disaggregate those two numbers as far as I'm aware. So that would be interesting to know. Quite critical, actually, how many jobs were created and how many jobs were saved. And then looking at you again strategically, how do you compare yourself with entities such as Temasek, the Singapore? I know it's a sovereign wealth one. You're not a sovereign wealth fund, but is there not a case to be made for taking a portion of your portfolio and seeking out high growth companies that can not only generate significant jobs, but also profits for you, which you can then recycle into some of the more risky businesses, the businesses that probably do need to be supported at the early stage? And then final question, looking at new markets, are you accompanying ministerial and presidential delegations? There's been a big push into the Far East at the moment in the last week or so. Are you accompanying the ministerial delegations into these countries? And if you're not, why aren't you? That's all for the moment. Thank you.
Member Msikadzi?
Thank you, Chairperson. Let me also greet you, Chair, and all honorable members present, and the DIC, CEO, and all present. My question is on slide 8, it's speaking to performance, because the report is indicating that the performance is below target. My question to the DIC is that what is the plan to address the shortfall of the target by the department? And then part of the question has been addressed by the former speaker as to what jobs are expected, what was the target, and how many is still left. And then my question number 2 is on restructuring of BEE implementation by March 2025. According to the report, it did not realize. So I want to check with the IDC, what are the challenges and how are they going to address these challenges? And is there any plan to address these challenges? My last question is on a company by the audit report saying that Fosco Pty Ltd allegations of fraud in procurement services is investigated. My question is, what is the time frame for the investigation, and when will the report be presented to us? Thank you, Chair.
Can Mr. Gama raise his hand, Chair?
Yes, Honorable Gama.
Thank you. Thank you very much, Chair. Good morning to the IDC management, and thank you very much for the presentation that you've given us this morning. I don't know whether it's humility or modesty, but I think it's the opposite of it. The results are shocking, but the way that you sugarcoat them is as if, you want this committee, to believe that everything is hunky-dory, and maybe the attempt to tell us about the first and second quarter performance, which we are not going to discuss today, is really maybe aimed at doing that. You must tell this committee the results are shocking, because they are. They are not where they ought to be. Your revenue is down by 7.6% from the previous year. Your profit after tax is down by 95.6%. You almost made a loss. You went from 7.5 billion rand to 329 million. But the manner and way in which you come to us, you want to give us some kind of cold comfort, which I think is not very useful, because impairments continue, unabated. You've talked about operational challenges that are experienced by your investment companies, and I think Mr. Chance talked about one of them. But also you got weak earnings from subsidiaries and associate companies. The only saving grace is that you've increased interest income in term from your loan book, but everything else has gone down, and it's the second year that we're experiencing these things, happening. Last year you came and talked to us about your decarbonization strategies and how you were going to fund green industries, as well as some of the new sort of minerals and stuff like that, like renewable energy. But you were also talking about lithium, copper, zinc, nickel. I don't know to what extent you've gone with that. And then you'd also said you want to do more around some of the SOEs like Eskom and Transnet. We have not had any feedback in terms of that. You were also going to relook at the financial instruments and the systems that you use. Especially you wanted to support more infrastructure for growth industries. And then your counter-cyclical role, to me, it sounds like words. You keep saying you have a counter-cyclical role. It doesn't pronounce itself in terms of the numbers. The numbers are in sharp decline. And I don't know, I think we talked about headwinds. I think it's double headwinds that are being experienced, really. And I think you need to talk to us, much more, and say to this committee, what are the key issues? What is going to happen next year? What is it that is going to change in terms of the manner and way in which you are looking at your business? Because I think the business is in serious trouble. But the manner and way in which you want to tell this committee is to just sugarcoat the issues. I'd really like to get a sense of your response to this, because I think you need to be much more open and talk to us truthfully. Thank you.
Thank you very much. Further hands?
No further hands, Chair, that I can see.
Yeah. No, I just wanted to add. I just don't remember the name of the company now that we visited there in Saldanha, which
To Fairco.
to Fairco. So that company is depressed, and they are almost helpless from what we could pick up from the visit. I would like just to get a comment from IDC. What is the plan or a strategy there to either rescue, because we were told that almost 600 jobs are on the line as things stand. I would like to just get a comment about what's going on there. Firstly. Secondly, see, one of the things we had raised, I think, prior your turn, was basically to say that we need improvement with regard to turnaround for applications for your internal systems. I would like you to update us whether or not there has been some improvements with regard to your turnaround time, with regard to the projects that you look at. And finally, we had raised issues that the collapse of the network industries and the pronouncement that is continuously taking place to invite private sector participation present an opportunity for IDC to intervene where possible, so that we can also ensure that we can, ensure that the state is build its own capacity, but also build on resources of the country, other than to just give away everything that the country has. I would like you to comment on your strategy around those three issues. Thank you very much. We'll now hand over to you, CEO and the team.
Thank you, Chair. And as I'm accompanied by the acting Chief Operations Officer, David Jarvis, and Piwe and the CFO, I'm going to ask them to come in that order to respond to the questions that have been asked. And then I will come right at the end to, as requested by Honorable Gama and Honorable Chance, to just set a scene in terms of what is it that we are planning to do going forward to change the direction that we find ourselves in. So let me hand over to David.
Okay.
Good morning, committee. Good morning, Chair, honourable members. It's David Jarvis here. I did want to respond to a couple of the issues that have been raised. The first one is the issue of the turnaround time, which has been raised by Chair as well as Honourable Chance. This remains a key focus for us, and we have implemented a number of interventions which have seen us able to close some of the gaps that we have had in terms of our turnaround time. So I can give you the latest figures. The bulk of our transactions have been delivered within our SLA time in the current period. So we are seeing an impact, and I'll give you an insight into what we're trying to do. So we have tried to simplify some of our processes. We realized that there was duplication in some processes. For example, I'll give you a practical example. As we're clearing CPs, we can also be, conditions to the agreement which need to be met. We can also process the first disbursement, which used to be separate processes. So some very practical issues which we've addressed to speed up our processes. It still does remain a pain point. It's a key area of focus. We continue to look at our processes, but we think that is we will get marginal gains currently. A big gain is through digitalization. We did advise a committee that it was something we were launching. We are implementing an MS Dynamics project across the corporation, and it will be also focused on our due diligence processes. So we do believe that will also speed up the processes. A major issue committee is obviously the culture issues. So if we have officials who are customer focused, who are solutions oriented, then that also really does assist with moving our transactions along the line. One of our biggest, and that is an area we are addressing. So the CEO has come in with an agenda to really ensure that IDC is a high performance culture, and she is driving an agenda to really address culture and making sure that we have the culture that we want and that will deliver to the public. Some of the challenges we sometimes face on the in turnaround times, I would say the biggest issue is where we are awaiting information from business partners. So they either have to give us a tax clearance certificate or financial statements, etc. So we do work closely with them to try and facilitate that type of information. But that is probably the biggest impediment to us getting transactions to our credit committees, where we have incomplete information. We can't proceed with the submission. So I hope that provides some insights. Chair, on the AMSA transaction, I do think we need to respond to Honourable Chance's view. We do have a different perspective. At the time when the Newcastle smelter was facing closure, we had downstream industries that weren't prepared for that eventuality. Particularly the auto sector, we had NARCAM and NAMSA, the two associations in the motor industry, saying that they weren't prepared for the closure of the facility. It provides specialty steels which are required for the manufacture of components which go into automobiles. So we had to step in to ensure that that closure didn't happen in a way that would have disrupted downstream manufacturing and would have meant a crisis, particularly in the auto sector, but even other sectors. So within our mandate, we are required to look at every transaction from a perspective of economic merit. And for us, the economic merit really was in the broader steel sector and ensuring that those downstream sectors weren't thrown into disarray, which do employ tens of thousands of people and have multiplier impacts even beyond that. So we don't believe we threw away the money. We thought it was an investment that we had to do on behalf of the South African economy and the steel sector. Chair, I think those are the two issues I will speak to, and I'll hand back to my colleagues. P-Ray, thank you.
So thanks, Chair, and to the committee members for the questions. So maybe let me handle a question from Honourable Member Gama on our interface with other SOEs, for instance, or Transnet, Eskom, and our play in that space. So, Chair, on the 31st of October, on Friday, IDC and the Department of Electricity and Energy will be hosting a session that will be bringing together industry and government stakeholders, Chair, to engage on the transformation program that was recently announced, with a particular focus on optimizing the localization opportunity that will be presented or by the program chair. So at least that's the grand vision. So this really is obviously on the back of the Transmission Development Plan chair, which does outline an extensive infrastructure expansion program. So this rollout, we believe, presents a massive opportunity for us to support reindustrialization efforts of the country, particularly of energy or in the energy sector, rather, Chair. But certainly, I think as we've often restated in our mandate, catalyzing low carbon growth. I think that's part of the sustainable industrialization growth path, Chair. But certainly, I think what's important is scaling local manufacturing and stimulating those supply chains. And certainly, I think the ultimate outcome is creating job opportunities that will certainly, I think, position South Africa as a hub for transmission infrastructure and manufacturing. So that's just but one example, Chair, that is pregnant. And certainly, I think that conversation will be hosted here at the IDC on Friday, and to see how we then organize ourselves as a broader ecosystem to support that ambition. So I hope that assists. I think on previous, obviously, engagements or iterations with the committee, we have presented, at least from IDC perspective, and that certainly is aligned with the country vision, our IDC critical mineral list, which then informs, what we will pursue in support of what the government has also positioned as priority. So perhaps it doesn't pull through in this presentation, Chair, but just to give the committee comfort that we've made headways. For instance, an example is a cobalt opportunity where we progressed in respect of the battery grade cobalt sulfate project, where we are now in a position where we can look for a strategic equity partner, Chair. So that's the one opportunity where we've progressed. There's also the copper and zinc opportunity, Chair. That's Palabora Mining funding to complete the second phase and commissioning of the copper rod production, Chair. So that's one opportunity. There's also the new Okipa copper mine, Chair, that we have just concluded a bankable feasibility study and value engineering funding, Chair, is being considered on our end. An opportunity, Priska Copper. Again, we've also concluded a bankable feasibility study, Chair, and in a position where we are now finalizing funding, hence the early works program. There's also a copper mine that is currently being assessed in Zambia, Chair. That's in the Mimosa region, Chair. We also, Chair, we did conclude a graphite proposition, Chair, that is in Tanzania, Chair. And we are in the process, obviously, of closing out on the legals, and we'll be looking to disperse. But that's just to give the committee a sense of what is being considered. Obviously, there's iron ore opportunities, Chair, that are also being explored, similarly lithium. But I just wanted to give a sense of progress beyond what we've as strategic focus areas, but really just now what we've done about it, and also what's in the system, Chair, on that note. And we've also collaborated with TCTH on water infrastructure, Chair, and certainly I think are close to that. Maybe if I can then use this opportunity, Chair, to then hand over to my colleague Isaac, who perhaps maybe will again just give a context around the revenue, why the revenue is down, and profits and impairments, perhaps, and maybe our colleague Helen, who's also in the room, to give a sense of the broader book performance, or the stars, I think, as our member Chance alluded to. Thanks, Chair.
Thank you, Pira, and thanks, Chair, and thanks to members of the committee with the question. Chair, certainly we it's not our intention to downplay the significant decline in our profits. We are concerned, and I think it's something that, as management, we always want to make sure that IDC remains financially sustainable so that it can deliver on its mandate. And I think that's a point we're trying to make in us being upbeat about the capital reserves and just explaining the drivers behind the results. And Chair, maybe just to refer the members of the committee to page 31. Chair, our income revenues is generally made of dividend income, interest income, and non-interest income. So Chair, you'll note on page 31 that the biggest driver on revenue is dividend income, which is down 1.8 billion. 1 billion of that, Chair, was the dividend income we budgeted from Sasol. So we have an equity investment in Sasol, others is Kumba and BHP. But Sasol in the main, Chair, we were expecting that on the back of improved performance, they'll be able to pay a dividend. However, they changed midway their dividend policy by prioritizing debt reduction, which meant there was no dividend declared in the current year. The second one, Chair, is Mozal. Mozal is one of our investments, which we co-own with South 32 and the government of Mozambique. They experienced some operational challenges. This is now before some of the electricity challenges they're experiencing now. They were not able to pay the dividend as we had budgeted or expected. So that was the other difference. So Chair, on the dividend income is really in the main those two that we had expected but didn't actually materialize. The good news, Chair, on that is that, and that will talk to the star performance we have. On the unlisted investments, we do have a healthy book on renewable energy and also on the chemicals business. On the renewable energy, it is about 12 billion rand in terms of the shareholding we have. So those tend to pay us a decent dividend income, but even the other listed, such as BHP, Kumba, and Exxaro, so they were able to pay the dividend income. So on the interest income, we do have the senior loans, and again, that talks to some of those that are able, that are not distressed, the business partners that are not distressed, they still are able to repay their interest income as it falls due and payable, and we're able to collect that. So, Chair, I think that just talks to the revenue, why the revenue is down. On impairments, and Chair also addresses when do we book the impairments. The impairments, so we tend to have in some of our business partners a shoulders loan, maybe a pref share, and a senior loan. So on the senior loan, this is where we focus on. When the loan and interest is payable, due and payable, and for whatever reason the business partner is unable to pay us, we count the number of days that they are supposed to pay. If it's more than 90 days, so we give our business partners up to 90 days. If they are unable to pay us out of financial distress, we then have to impair that senior loan. And to impair just means we provide additional provision, which suggests it's now non-performing. It's not a write-off, it just says that it's non-performing. We therefore have to increase our impairment provision, which then impact the income statement and the balance sheet. And it is the case, Chair, with this 4 billion impairment provision you see on our income statement. 1.7 billion of that was AMSA, as the member alluded to. The other difference is really an increase in impairment provision for other distressed business partners, where, Chair, we had to take a forward-looking view, given that as at the end of March, we were anticipating that some of our business partners will be negatively impacted by the tariff increase. The economic growth is not where it should be. There are some strong headwinds coming up, and we have to take a view at year end that perhaps we do need to increase our provisions, hence the 4 billion. So we've taken as much pain as we needed to, and we do expect that as the economy improves or some of these business partners show signs of financial improvement, we'll be able to reverse or record less impairments. So, Chair, I thought I will then, and then last year at the group company level, income from associates, and then if we unpack that, this will be now the profit or that is made by our associates. It's really a portion of the shareholding. So what we noted, Chair, most of these associates are in the mining and metals. And because some of them are experiencing challenges, so they are reporting less profits than they did in the prior year. And if you take our portion, whether it's 20% or 30%, that portion is now less compared to the prior year. And in this year alone, Chair, last year we reported 2.5 billion rands of income from associates. But this year we could only report 6. And again, Chair, some have made losses, some have made profits, but overall, the net income is 6 versus compared to 2.5 billion. So that's account for that significant decline. Chair, I will also talk about Fosco. Fosco being one of our subsidiaries, Chair. On Fosco, at year end, the management did receive a whistleblower that one of the service providers is implicated in some fraudulent activities. Chair, I must say, it was isolated to one service provider. An investigation was started, and I'm told, or rather the report back is that it has now been completed. The report is being discussed or reviewed by the board at Fosco, and just to understand what are the implications to the organization on that. Fortunately, Chair, because it was isolated to one service provider, this investigation did not affect our financial results, or it does not affect our financial results from a materiality point of view. So it's something that we will keep a close eye on, and to the extent that it impacts on the ITC as a group, we can provide that feedback. Chair, I will maybe pause here. I'm not sure if I think I've covered all the questions on the. And Chair, maybe on the countercyclical, on the financial instruments, we said we'll try and look at when we dealing with our state-owned entities. I think Pio did allude that we have exposure on with Transnet. I think it's about 1 billion. And then we have an exposure to Trans-Caledon. And we also have some exposure, which is old one, with Land Bank. So, Chair, we have a robust policy in how we interact with our state-owned entities. And Chair, that's really to ensure that where there is areas of collaboration or supporting them through funding, to the extent we can ring-fence project where the cash flow of projects are ring-fenced, that is the preferred way of interacting with them. We tend not to advance a loan at a group level or for general purposes. And that's because some of the loans or the funding we raise from the local banks or international banks, they do have some conditions, or they would like some understanding as to what that relates to. And this is Richard to manage their own exposure to the state-owned companies as a whole. So they tend to just want to make sure that they don't extend funding to the ITC and ITC on land to other state-owned entities, which means their exposure is bigger than they think it might be. So, Chairs, those are some of the guidelines we use in terms of how we advance. And the instruments, Chair, really is to talk about the nature, the ring-fencing nature of how we extend that funding. I think, Chair, I'll pause here and ask maybe Helen to provide some color on some of the business partners that are really performing are stars. Just to give you a comfort, Chair, of the top 10 largest exposures of the ITC, only 2 are non-performing. The others are performing. If it's not performing, where there's concerns, we flag it as a concern, but it's still a performing asset. So that just gives you some kind of color that if was to pick your largest exposures, that's the picture we have, Chair. you have maybe one or two examples of the companies that perform?
Thanks, Isaac, through you, Chair. So yes, as Isaac has indicated, we do have investments that are performing well. And one of the good investments that we've made is in the renewable space. We have several investments that are high-performing clients, and they are also paying us dividends on a regular basis. We also have non-RIP clients like Hans Marinsky, which are also doing very well. So we do have good performers in our book. I think they are overshadowed by the challenges that we currently have with the other counters. On Duferco, IDC has a strategy in resolving and assisting Duferco. We actually have been lobbying the DTIC and ITEC to relax the import and safeguard the duties so that Duferco is able to import and be competitive in terms of the raw materials. And also be able to sell in the local industry in South Africa, because what we've realized is because of the tariffs, they are not able to enter the US market as they used to. So that is the short-term strategy that we are looking to support Duferco. In the long term, we are also looking at resuscitating Saldanha Steel, so that we are able to make it a green steel industry facility, and then they'll be able to get their raw materials from there and be competitive in their production in the local market.
To the CEO.
Thank you, Helen and team. Chair, just to come in and address perhaps the question that was raised by Honorable Chance. Or maybe let me just start by re-emphasizing what the CFO has said. Perhaps it's modesty, but really these numbers are concerning to us, where we have ended up as an organization, as a corporation, especially given the mandate that we have in front of us. So it's, as the team has given the explanation in terms of what is it that we're going to be doing to try and improve. The numbers with our NPLs and impairments really are bled by the improvement is, I think, just as Isaac said, bled by the two counters that we have out of our top 10 performing clients. And we will try and send this information, Chair, to you just so that it's clear, because it may be hidden in the slides that we've provided. With regard to, you asked a specific question with regard to how do we compare with entities like Temasek in Singapore. While we have not benchmarked ourselves that much with sovereign wealth funds, I think the challenge with the IDC is that since inception, IDC, I believe, has never received capitalization from the state compared to other DFIs. The DBSA, I know, has on one or two occasions. So what it means is that then we rely heavily on our reflows from the funding that we lend out through our loans or our dividend income to basically pursue or support the private sector and support our business partners. And therefore, what it means then is that our approach is going to have to be one that balances that financial sustainability with the development impact or the mandate that we have, until a decision is really made for the IDC to obtain equity funding or injection of funding from the state, so that we can continue doing the developmental, the project development work, which doesn't pay for a number of years, but once the industries pick up and then we are able to make up for the money that we have invested in those entities. So in a way, the capital structure of the IDC in itself is constrained by the funding model that we have at the moment. Having said that, Chair, as the CFO has indicated, there are measures that we are taking into account to try and reverse this trend, especially with the bed counters that we have on our book. With regard to new markets, yes, indeed, we have been accompanying the Minister of Trade, Minister Pakstow, on some of these visits, because for us, it's quite clear that we need to support our partners to find new markets, because, as I said, the tariffs in the US have increased their cost of doing business. So the work that we are doing when we accompany them is really to look at promoting and marketing our companies. The one comfort that we have, for example, is that in the agriculture sector is that some of our best performing clients actually tell us that they have long moved towards looking at markets in Europe and Asia. So the impact for them has been already worked into their numbers, and they're moving to other markets. So this is work that we continue to do, and we are in those trips with the minister. In terms of strategic areas going forward, there was a very clear question from Honorable Gama. You know, given where we are, what is our focus? Where are we going? So our strategic focus is going to remain on looking at beyond. I want to mention that the role that we play in preserving industrial capacity in distressed sectors and the role of preventing deindustrialization is something that we have to continue doing as the IDC. And we so the interventions that we did or we do, for example, in the steel industry, for us was, as David said, in line with the call that we had from the automotive sector, to support them for a while they see what. And the last thing that we want is to replace South African products with imports. So that is the role that we will continue to play, obviously guardedly. But critical minerals, as the team has shared with you some of the examples, going into the rest of the continent for us provide that opportunity for regional value chains and really across the critical minerals that we know are going to be important and we want to support. And everybody, as you know, is looking at critical minerals, and in this region we've got 17 of them. So as the IDC, we've identified those and we've mapped out. We've got a strong pipeline of projects, both in South Africa and in the rest of the continent, where we will be going to this. Energy, I think the team has mentioned, it will continue being a sector that we support, but more important, transmission financing. As you know, it's a key area that the Minister of Energy is now focusing on. It's a key enabler that we need to unlock the logistics challenges that the economy faces. As I said, we can't do this by ourselves. We are going to do it in partnership with others. So our strategic focus going forward is in talking to and engaging with other institutions such as the PIC. We will be signing an MOU with the PIC in the next coming months to basically share a pipeline of projects, because they have identified critical minerals as an area to support and have put aside 1.5 billion rand to support this sector, and we believe that we can be a good partner with them. And so we do also in some of the partnership funds that we manage on behalf of other donors outside the country and internally. So this, Chair, is what we will be doing. And also just to mention agro-processing, our agro-processing book is growing and particularly driven by poultry. We're seeing quite a good pipeline coming in from that sector. And so we will, in the region, for example, we've supported a company in Namibia that is establishing because they want to support their beef industry across the value chain, so establishing an abattoir. So agro-processing is a sector that we also want to look at. And this is beyond the sectors, Chair, that are for us critical to this economy, being the steel industry, which is within manufacturing, and mining, which is where critical minerals come in. Let me stop here, Chair, and see if we have covered your questions.
Are there any further hands on IDC?
Chair, I
Chair-
know
Chairperson,
Ms. Musukatsi, Chair.
Yes.
thank you, Chair. I asked 3 questions, but I didn't get any response. But one was partly covered. The other 2, I didn't get a response.
Which ones are those? If you can just read the ones that were not answered.
Okay, one of the questions was the issue of the allegations of fraud and procurement services for the post-score PTID.
Yeah,
I
that was responded to by the
Okay.
CFO.
All
Yes.
right, Chairperson, I didn't hear. Thank you.
Okay.
And
Second one.
bye.
The next one.
Dr. Kigaba, Chair, also raised his hand, Chair.
Okay, Dr. Kigaba.
Thank you, Chair. And thank you to the CEO and the team for the responses to the questions which had been asked. Just a few additional questions for clarity. One is on I don't know if there are any board members who are present with the executive directors, because I don't remember us interacting with the new board. But secondly, Chair, one would like to know, how long have you had the current auditors? Or asked differently, when last did you rotate your auditors? Secondly, have all board committees been constituted and are they functional? Thirdly, with regard to several targets, some of which have not been met, such as in relation to job creation and so on, what were the challenges in achieving those targets, and what measures have been put in place to address those challenges? And finally, going back to the auditors, they've identified several findings. What were the root causes of those findings, and what steps are being taken to correct them? Thank you.
Thank you, Chair. I'm going to ask the CFO to come in and
Just before, I'm just trying to check if there is no further hands so that we can conclude and the discussion.
No further hands, Chair, that I see.
Okay, so if you can respond to Dr. Kikaba's questions.
CFO.
Thank you, Chair, and thanks, Dr. Kikaba. I'll start with the auditors. The last rotation, we've got 2 auditors as joint auditors, Deloitte & Touche and BDO. Deloitte & Touche are on their 4th year, so they were rotated in 2022. So they'll be signing off their contract. It's a 5-year contract, so the last sign off is year ending 2027. And BDO, they just started, basically. They were appointed last year, so they'll have another 5 years. In terms of the root causes of the findings, Chair, I'll talk with two main ones. So the first one, which is Section 55, which talks to the draft financial statements not having material changes when compared to the final financial statements. So the auditors in the main have identified three themes. The first theme, Chair, is that because we are a DFI, we do tend to restructure our investments, i.e. the loans we have. Sometimes there's deferment, sometimes there's moratoriums, sometimes there's write-downs, etc. That process is manual by its nature, and therefore there tend to be errors in terms of accounting for the final change that has happened. So the theme is that our processes across IDC are manual in nature. There is a need for us to move more controls into the system so that we can reduce the level errors. And Chair, I must admit, in our case, because the investments tend to deal with the material, so if we can have an error on one investment, that error could be 500 million rands in terms of how you account for it, or it could be 1 billion, and that becomes material, unfortunately. The second theme, Chair, that the auditors have identified is the irregular expenditure when it comes to our subsidiaries. At an IDC level, as a company, we don't have that issue. But because some of our subsidiaries, Chair, by virtue of them, even though they are in a private sector, so Fosco, as an example, is a private company, but it's controlled by IDC. There are other shareholders. They have to comply with PFMA. They did have an exemption until 2020, but that exemption has expired and was not renewed. So the auditors are saying these subsidiaries are struggling to get up to date with the requirements of the PFMA, and therefore they end up incurring irregular expenditure in their procurement processes. And the third theme, Chair, and maybe I'll talk to the mitigation we have. And the third one, Chair, it is about the filling of critical skills in certain roles where we've lost some of the critical skills. Either they've been poached by other banks or they've moved for greener pastures, that some of those skills need to be replenished as soon as possible. So the mitigating actions we're taking, Chair, on the manual nature of the IDC, we've started initiatives to automate some of the processes we have across the organization. This will take a while in our view, but where we can achieve within a year, especially where it's critical for the audit, those are being prioritized. So for example, Chair, we've just procured a financial statement disclosure software, which will enable us, Chair, to automate and reduce some of the manual processes. On the irregular expenditure, Chair, the mitigation we are supporting the subsidiaries to update their procurement policies. They've increased their resources in terms of the procurement team. They've also asked their internal auditors to assist them in putting in place the proper registers that ought to be in place and supporting them with the completing the requirements of the PFMA when it comes to advertisements, when it comes of the running the RFPs, and also in terms of the changes in the contracts that where maybe the contract is being extended, that this is properly documented, etc. And then lastly, Chair, on the filling of critical skills, we are filling those critical skills, and we are engaging the recruitment agencies to assist us, and we're also growing our own timber as part of the succession strategies. So, Chair, I will pause here in terms of the questions that have been asked. Thank you.
No, thanks, CFO. Maybe just to give the jobs question asked by Honourable Member Dr. Gigaba, I think you will also appreciate that the jobs issue is a significant challenge, I think, for all of us. And the CEO has made requests, and we, collectively, I think, within the ecosystem have given thought to how we contribute towards addressing this challenge. So colleagues have done an extensive review, at least over the past 10 years, in respect of how we performed against this target that we've set for ourselves, with the view to seeing how else our efforts could be better directed, Chair. So from the analysis that was done as recently as about 3 months ago, we do appreciate that over the past 10 years, our job creation efforts have remained relatively flat. We've been able to, on average, create about 18,500 jobs per annum through our efforts and activities. But post-COVID period, which I think saw a significant outlier in terms of our jobs contribution, which in part was also driven by our contribution in social unrest, floods, etc. So there was that bit, but I think there is certainly, I think, an appreciation that this has remained elusive on our end. What we also were able to deduce from the analysis, Chair, is really get a deeper sense of where we have been able to create jobs, or rather the sectors where we have been able to create jobs, which was largely in mining, tourism, metals, and energy, Chair. So 60% of new jobs created were from these sectors. And this is specifically new jobs, Chair, and 62% of jobs saved was in respect of agriculture, clothing, textiles, footwear, and leather, as well as what we categorize as trade. Energy and infrastructure, Chair, mainly the contribution insofar as jobs are concerned has been construction-related jobs. Maybe just one other just insight, Chair, to assist the question from Dr. Gigaba is more going forward, what we've at least determined is to focus on sectors with jobs-rich industrialization potential. And that's really in as far as the labor-intensive, labor-absorbing, and labor-enabling focus areas, Chair. And on the labor-intensive side, we believe agriculture, forestry, and fishing present that opportunity. Certainly, I think continuing with clothing, textiles, leather, and footwear. Also in the wood, paper, printing, I think that's where we'll express ourselves, manufacturing and equipment, but we've at least been able to define the list. And labor absorbing, again, agriculture does tick that box, but it's just really to give the committee a sense of the deep dive that we've expressed ourselves to, Chair, as we plan going forward. And this is also just defining then, the job creation framework, which is work that's been led by one of our executives who's not in the room. Certainly, I think having identified also priority industries, Chair, and that obviously I think lend themselves towards our ability then to support SMEs and entrepreneurial support, and that ecosystem has been defined. So it's something that is very close to our hearts, and we do appreciate the risk that it poses more broadly, Chair, and that's something that is a priority for the CEO, hence why this work was done, and certainly I think presented to the board as recently as about a month ago, and certainly then it's going to find expression in our plan, priorities, and certainly activities that in the coming months we'll be able to align. So, Chair, then I think there was one question that was not addressed, which I think I'll hand over to the CEO. I think it's in respect of the board constitution of board subcommittees, board committees. Thanks, Chair. Thank you.
Thank you, Chair, and I'll be very brief. Yes, the board has been constituted. We actually had our first board meeting this past Monday, and all committees of the board have been constituted as at this past Monday. And We do not have any member of the board with us today. The board has been going through a whole lot of induction into the work of the IDC, but we are fairly confident that we have a good board with a combination of succession, helping us with transitioning, but also bringing in new skills that we believe are going to be very complementary to the work that we do. Thanks.
Thank you very much. Thank you very much. I think the concerns have been raised in certain areas about the trend and the direction, and I hope that you will note so that in our next interaction we are able to deal with those issues that have been raised by members here. Secondly, welcome the appointment of the board. We're a bit concerned, especially to the DTIC, that we saw, appointments, resignations, so we're not sure what was happening, and we're happy that there is stability, there is continuity, and the structures have been established so that there is no vacuum in the main. Coming from the process where that has been undertaken in the main. We will obviously keep our eye in terms of the DFARCO and other areas to see that the situation doesn't get out of hand. Also will appreciate if the IDC can, upon concluding the investigation at FOSCO, can share or come and present to the portfolio what has occurred there, so that we can ensure good governance on our part. I think with that we appreciate the IDC, and then we can get to the next presentation. And I believe that colleagues are free to leave the meeting to focus on other areas while we're dealing with specific areas. But if maybe one or two colleagues can remain in case there are issues, because there's always been this one issue that was never resolved. Maybe I can say it so that there's no need for IDC to be here. There were proposals initially. I think the CFO and the manager's strategy, Ms. Marumo will remember, about the assistance that we requested between the IDC and NEF for capitalization of the NEF. So we would have loved to just get a sense whether or not you guys are having a discussion and how far things are. Maybe so that in the next meeting you can then give us a proper report. I don't know. If you can deal with that issue, then I think we can release the entire team of the ITC. Thank you. Over to you, CFO.
Chair, I will respond to this. Indeed, we are having discussions with the NEF, and they are very advanced. I am positive that in the next engagement with the meeting, we'll be able to report on where we land, as these are negotiations between the two parties that must be suitable to both of us. But we are having those discussions. Thank you, Chair.
Thank you very much. Andre, no further hands so that you can release the colleagues.
Correct, Chair. No further hands.
Okay. Thank you very much. You are released. We'll take about 3 minutes, 3-minute break.
Yeah,
and then while you're setting up for the next presentation. Thank you very much.
Thank you, Chair. Thank you, committee members.
I'll be curious to hear.
Thank you, Andre. Are we ready?
Chair, I think we are ready, Chair. NEF is on the platform.
Okay, over to Ms. Matomela.
Chairperson, thank you very much. The NEF chairperson presentation is going to be led by the CEO, Mr. Mziwabantu Daimani. He is together with some of the board members as well as the executive chair, and he will introduce the team. Chairperson, thank you.
Thank you very much. Over to you, CEO, and please introduce your team.
Thank you, Chair. Is my screen visible?
Yes, it is, CEO.
Thank you so much, Ms. Madam. Good morning once again, Honorable Chairperson and members of the committee. And thank you for the opportunity to present to you on the integrated report of the NEF for the 2024-2025 financial year. So to introduce the board member that we are with, as well as the executive team, we are accompanied by Ms. Buhle Tonise, who is one of the board members of the National Empowerment Fund. We also have Mr. Pumutso Sipuma, who is our CFO. Ms. Zandile Mhlongo is our group company secretary. Karishma Gavenda, who is our general counsel. And then we've got Mr. Andile Stimela, who is our executive for strategy and significant investment. Mr. Nhlanhla Nyembe is an executive for SME and rural development, as well as Pale Samzolo, who is the manager in our strategy department. Dikato is also working in our communications department. Chair, before I go into the presentation, I will request Ms. Tonis on behalf of the board, maybe to make a remark, and then we'll go into the details. Thank you.
Yes, she can proceed.
Good morning, Chairperson of the committee members, fellow colleagues. As indicated, I am Buhle Tonise, and I'm part of the new board of trustees that has been recently appointed. Without taking much of your time, would like just to confidently indicate that we have hit the ground running.
Can we see the new board member, please?
Apologies about that, Chairperson. As indicated, as the board, we have hit the ground running. Despite being recently appointed, we have had our induction and our strat plan, and that was deliberately done to ensure that we do not delay in terms of executing the mandate. The CEO will submit or present our report today. And with that being said, we would assure the committee that we dedicated in ensuring that we not provide only transformation that is expected from us, but we ensure that we accelerate that particular process. Yes, there would be a need for third-party funding in assisting what is already seen as a shrinking fiscus. And we hope that with the assistance of the committee as an oversight role, we will then be able to position and create a brand in NEF that will be appealing even to external stakeholders to ensure that we correctly or properly execute our mandate, ensuring that there is access to the economy across the different societies within our community, because you would know that we would have challenges considering the urban and the rural having access, infrastructure, and everything that comes with requiring, ensuring that there is a smooth flow of process in accessing the economy. So with that being said, thank you very much, Chairperson, and I hope that this will be a fruitful process, and where we need guidance that would be surely accepted, and where we need thorough explanation, I'm certain that the CEO is ready to provide same. Thank you very much, Chairperson. Thank you.
Thank you very much. Congratulations to the entire board. We wish you well. We hope that we'll soon have a physical meeting where we'll meet in person, because the board also appears in Parliament to interact with ourselves. Thank you very much, and congratulations to you and the rest of the board. Over to you, CEO.
Thank you, Chairperson. Without further ado, I will go into the presentation. And Chairperson, the purpose of our report today is to present to the committee on the performance of the NEF for the 2024-2025 financial year. That's on both the financial and non-financial aspects of our mandate, as well as certain aspects of our governance. The NEF's mandate is focusing on transformation, industrialization, and inclusive growth. So what we are saying, Chair, is that we're focusing on growth, but we are of the firm view that the growth in the country has to be inclusive, which means that every citizen of the country should be involved and should participate in the government's efforts of achieving that growth. We report to the DTIC, to Minister Parksdow, so we align ourselves to the strategy of the department, the industrial policy strategy, the National Development Plan, and the MTDP framework. So the report that we're presenting today was presented in terms of the framework that has been issued by the government and in compliance with the applicable legislation, including the PFMA. Touching on the mandate of the NEF, NEF is a government-owned entity, and our mandate is to be a catalyst for broad-based Black economic empowerment in South Africa. We ensure that we execute on this mandate by providing funding and innovative solutions to people in the country. So we play a catalytic role. We are established in terms of legislation, which is the NEF Act, and we also subscribe to the principles in the broad-based Black economic empowerment, including the codes which were issued under that. Touching briefly, Chairperson, on our strategic objectives. As I said, our objectives are aligned to the objectives of the DTIC, which include investment stimulus. So how we interpret this particular objective is that we grow Black economic participation via sector-specific funds that stimulate industrial and SME investment. And the work that we do, we aim to ensure that we achieve transformation. We expand the participation of historically disadvantaged groups, which is the Black people, in the economy through funding, mentorship, and enterprise development. So this is key for us because it aligns with Section 9 of the Constitution, which talks to the equality clause. And we believe that equality is not only formal equality. We do need to also implement measures that ensure substantive equality because of the history of our country. We also deal with the challenge of structural reform, dealing with the systematic barriers, working with the partners and government to ensure that we strengthen the inclusion and access to finance. And induced demand talks to how we support local production so that we increase more localization and the replacement of imports, and also ensuring that we boost the exports and the revenues that our clients are making from export activities, and ensuring that they are competitive in the markets in which they are operating. We focus on the catalytic sectors that have been identified by the government. Those include the manufacturing sector, the tourism sector, agriculture sector, and so on. The colleagues from the IDC touched on the number of those sectors, so I will not repeat them, Chair. And we also ensure that the country continues to develop a capable and developmental state. We will touch on that in some of the slides as to how we actually achieve that. In terms of our APP, in order for us to achieve the objectives that I've just talked to, we have come up with a number of programs. The first one, the Black Industrialist Program, this is an existing program of government. So what we do when we look at this program is that the government has got the Black Industrialist Scheme, but that scheme has been structured as a reimbursable scheme. So the government then, through entities like the NEF, is also providing funding so that the entities have the funding at the beginning of their enterprises. We fund them such that when then they are able to claim under the Black Industrialist Scheme, they utilize those invoices and other measures in order to access the Black Industrialist Scheme. So we complement the work that the government is doing there. On the aggregator program, we actually develop programs working with farmer marketplaces as well as other aggregated centers. So we fund anchor investors that we utilize as markets, particularly for our SMME markets, as well as our emerging entrepreneurs. So our belief in this is that it is not enough to just fund businesses. You do need to play a role in creating access to markets. And most of the clients that approach us would have a single market. So through the aggregator model, we are able to diversify their offering and also offer the markets from within the networks that we create as an organization. We also support businesses within the green economy, early stage renewable projects, as well as other projects that we fund in other industries. We ensure that they have got access to renewable energy. On the SME side, we support franchises and we also support what we call entrepreneurship. So that's SMMEs in various areas to ensure that Black businesses, they participate in diverse markets within the country. And we also support retail networks and as well as procurement finance. And we have an arm that also looks at enterprise and supplier development financing. On the program of natural and cultural beneficiation, this talks to how we are actually leveraging on the beauty of our country, as well as the creative talent of South Africans. So this includes items like the tourism sector. We play a big role there where we support businesses which are involved in the tourism sector. I do have a slide on that, so I'll talk more as to how we are actually dealing with the tourism sector. And we also play a role in the film and TV space to ensure that the creativity of our people is actually increased, because now the entertainment space is an international market. So we do need to ensure that there is material that is produced in South Africa, which is available even worldwide. In terms of our performance for the 2024-2025 financial year, we have achieved 81% of our targets. And during the course of last year, the committee will recall that the new administration came into office. And we then engaged with our new minister as well as the DTIC to look at our KPIs, because the vision that was given is that we need to focus on implementation and impact. So we had to change some KPIs which were measuring progress, or what is generally known as paper KPIs. And then the KPIs that we have now are measuring the actual impact. And through that process, we finalized the targets and the new APP was approved. And I am happy to report that of those new KPIs, we managed to achieve 81% of them. A snapshot of our KPIs, Chair. Firstly, the number of businesses or SMMEs that we funded. We had the target of supporting 150. We supported 197. So we crafted the KPIs based on the resources that we had, the financial resources. as well as the impact that we wanted to achieve as an organization. And in terms of the value invested, the target was 1.5 billion. We achieved R1 billion. And in terms of the agribusinesses, we had set ourselves a target of achieving 44%. We achieved, of achieving 40, we achieved 44% of that target. Black industrialists, the target was 50% of all the work that we do. We achieved 58.5%. Disbursement to businesses which were owned by women, youth, and people living with disability, the target was 50%, we achieved 38.6%. And the disbursement towards catalytic sectors, the target was 75%, we achieved 42%. If I may just talk to that one a little bit. So as we were reviewing the strategies working with the DTIC, in the catalytic sectors, we then realized that the services sector and the retail sector were one of those sectors that are assisting the country to create jobs. And then that was identified as one of the catalytic sectors. But we have since included them in the calculation for this current financial year. If it was part of the KPIs in the previous financial year, we would have actually exceeded the 75% target, because that's one of the areas that the NEF is strong in. But I think for purposes of reporting correct numbers to the committee, we kept the numbers as the KPI was at last year. Now, the percentage of businesses operating outside the 5 metros, target was 45%, we achieved 48.2%. In terms of job creation, we had a target of 10,500 to achieve 13,653. So this KPI remains one of the key KPIs within the DTIC family. And it's one of those focus areas that as we invest in transactions, we must achieve the transformation, but we must also ensure that we achieve the job creation targets. The number of people trained, we train businesses, some of the entrepreneurs that seek funding from the National Empowerment Fund, they do not have their businesses ready, and they also need training on markets and also other technical aspects of their businesses. So we did achieve and exceeded the target of 3,000, and we achieved 4,339. Now, also on intubation, even though this is not a critical aspect of our work, we do ensure that we assist businesses with intubation. The target was 9, we achieved 20, and we continue to work with various partners to ensure that we increase this access, because if we are going to create the culture of entrepreneurship in the country, we do need to play a role in that space. Economic value add, which is ensuring that the businesses that we fund, they increase their performance. That's in terms of revenues and also in terms of their exports. We measure based on the performances and how we've actually assisted those businesses to improve on those particular indicators. The target was a 4.5 billion. We achieved a 9.9 billion. Now, value of revenue from exports, once again, we had a target of 75 million and we achieved 161.5 million. So this is very encouraging for us because it means as we fund clients, these clients now are starting to expand. They start in South Africa, but now they are starting to export to other countries, and we continue to focus on. And the payment of suppliers, Chair, we had a target of paying at least 80% of our suppliers within 20 days. We achieved 96%. And in terms of the time it takes us to pay the funds that gets approved to investees, from the date that we commit to the funding, the target was 70%, and we ensure that we pay 83% of those investees within 45 business days. This is very important because it talks to the government's strategy of ensuring that the deployment of resources is done within reasonable time. Impairments is one of those areas that we are grappling with the target of ensuring that our book is not impaired in excess of 30%. And we managed to achieve what we had set ourselves. But this is one target that we're grappling with, because as we begin to support the businesses that are in turnaround phases to ensure that businesses do not close, it is going to have an impact on the impairments of those businesses. And also because of the new accounting standards that we are adhering to, there were changes to the GRAP standards that are applicable to the NEF. The CFO will talk to that later on. So it will have a temporary impact on our impairments. The collections, this talks to the sustainability of our investees. So when we invest money, when we issue installments, our target is to ensure that at least 80% of the installments that we issue, those clients are actually paying back the money that we invoice to them. We managed to achieve that. At least 80% of our clients managed to repay their installments to the National Empowerment. A brief comparison year on year, Chair, on some of the critical indicators, because I wanted to show on this, if the committee looks at the 2024-2025 block, you will see that in terms of the approvals, historically, we used to have higher approvals that we disperse funding within 45 days of approval. So it means that as we approve transactions within a month or two, those funds get deployed into the economy for the approval and the disbursements. And I think what we actually also ensure is that we utilize almost all the resources that we had in any given financial year as disbursement into the economy. If I may touch just on a few case studies, Chair, of some of the investments that we've made, just to give the committee one of those is an organization called Mint and Honey. This business is in Atlantis in the Western Cape. We funded this business. It manufactures various products, food products, particularly cereals. And we, with the 39.8 million rand from the NEF, they managed to also increase their capacity and created additional 154 jobs. And that's very key for us to ensure that as we fund, we increase job creation. And this is one of those projects that we co-invested with the Black Industrialist Program of the DTIC. So it shows that if government works together, we are able to achieve credible and practical results. Your advantage is in the furniture space. It is a business that is located in the Isithebe Industrial Park in KwaZulu-Natal. And we funded 10 million rand, and that 10 million rand increased the jobs in the business. So that job employs more than 440 people presently. And we are working with them closely because that's one of the sectors that we have identified that it is going to assist the government to create more jobs in the future. So expansionary opportunities, we nurture them within the projects that we support. I will not go to through each and every one of them, Chair, the examples, but maybe on this particular slide, I will touch on the engineers gears, which is also a manufacturing business, which manufacture gear system and gearboxes, as well as conveyor belts and other transmission products. We funded them for 41 million rand, and that has created 57 jobs. And once again, there was a grant that has been approved from the Black Industrialist Scheme of the DTIC. So on the mining-related services, let me just mention this Urea Resources project, which is a project that we have funded in the Mpumalanga Coal Belt. It was funded in 2020 by a Black entrepreneur, and it was awarded contracts by a joint venture between Tungela Resources and Exaro Resources to perform mining and extraction services. We funded the business for 45.7 million rand, which has created 120 new jobs and has retained 3 further jobs. So now on the digital space, Technolibra Solutions is one of the case studies I want to mention, Chair. It is a business that is a level 1 BEE entity. It is owned by Black entrepreneurs, 100%. And it is also a business that has increased its revenues, and the revenues have reached over 100 million rand. And the funding of NEF, which is 14 million rand, was towards working capital needs. So what we are seeing, Chair, is that certain sectors, like the digital space, it needs for us to spend the capital on the skills, because we need to create the digital skills in the country, and hence most of the funding will go towards the working capital of that business so that it can train particularly the young people that will actually create the digital tools that the country needs. And that business has created 95 jobs through the funding that was provided by the NEF. And we utilize this entity like any other investments we make in order to ensure that it absorbs trainees, which is the graduates that are produced by our tertiary institutions on an annual basis. So in terms of job creation, we don't only look at ensuring that we create employment in general, we also look at creating employment opportunities, particularly for those who do not have experience. I will now request the CFO to go through the next couple of slides. CFO.
Thank you, CEO. Chairperson and honorable members, I'm pleased to report that the National Empowerment Fund has delivered strong financial results for 2024-2025 year, confirmed by achievement of key economic and developmental indicators that demonstrate our continued impact on transformation and job creations. I will start with the collection ratio. We have achieved 80%, and that is mainly due to improvement in our loan book quality. We saw an improvement of collectible portion to more than 58%. But I'll cover some of the interventions that we put in place to make sure that we achieve a higher collection ratio. The return on investment was also achieved. We're sitting at 9.5% against the target of 7%. The impairment ratio, which is something that we monitor very closely in order to balance the two pillars, financial sustainability and developmental effectiveness. So we've achieved it, but there was an acceleration in preparation for the transition, as now we are moving to the new accounting standard, which requires us to report impairment upon commitment, and the standard is punitive in nature. And then the cost to income ratio, we're sitting at 38% against the target of 58%. This is an evidence of the ongoing review of the effectiveness, operating effectiveness and efficiency. And then the surplus before fair value adjustment was also positive. That also goes with the overall surplus for the year. So in terms of our key financial indicators that are linked with the indicators for the financial sustainabilities, we have achieved almost all of them. The unencumbered cash, which is the uncommitted cash, our target was 400 million. We managed to close with 430 million. And this is despite the 1 billion that was invested in the economy last year. Moving on to the next slide, Chair. So balance sheet optimization review is not an event at the National Empowerment Fund. It's an ongoing activity with an endeavor to maximize return on our balance sheet components. For example, the investment in associates as well as the subsidiary. So our aim is to make sure that we make those strategic private equity investment that will yield dividends, or we can exit with a good IRR. So now you can see that it has improved year on year by 44%. But the only challenge is the quantum, because if we had invested in millions or billions, that 44% will have translated into a huge gain, which we can then reinvest in the economy. It is something that I think as NEF we've been requesting for full capitalization so that we can then expand. And then in that way, we can then be able to make the impact on the transformation. Investment at fair value as well, we did well. It's with that investment at fair value, we've got an entity called Busamed. As NEF, we provided a seed capital of the Busamed, but currently that investment is making over 2.2 billion per annum. So what it means is that if there was enough financial resources, we could have multiplied that impact and also reinvest into the economy. So the originated loan, which is our core, so we have also improved it by 7% year on year. So that is due, for example, to the improvement in the loan book quality. We've also reduced the number of the transactions that were on subsequent moratoriums, and we've also segmented our book. For example, the focus is mainly on Class A and Class B, wherein we've seen a very good return as well as the low impairment. But again, the challenge is around the quantum. So the cash and cash equivalent. So the NEF has maintained a cash balance of over 1 billion per annum, just to make sure that we remain a liquid and a going concern. But we saw a decline year on year by 20%, and that is due to the disbursement, because last year our disbursement was over 1 billion. And if you compare with, for example, past 5 years, just before COVID, we're sitting at a disbursement of below 500 million. So we have disbursed, but we still maintain a positive cash of 1.7 billion. And then moving to the NAV, so we close with an NAV of 4.7 billion. And compared to the initial capital injection by government, which was 2.1 billion, so that means we have doubled up the initial installments that we received as a capitalization at inception. So what it means is that if we can we've managed to double. So if we can get 10 billion more, we could double it over time. And then I'll then move on to the income statement. So you can see when we talk about the balance sheet optimization. So all the income, it grew by 20% year on year, driven mainly by interest from developmental activities, dividend from unlisted investments, as well as the revenue from non-exchange. And then the admin expense, it decreased year on year. This is due to ongoing review of operating effectiveness as well as the efficiency, because it's rare that you will see a decline in operating expenditure on an ongoing basis. So the net impairment charge, I think I've covered it. There was an acceleration in preparation for the new accounting standard, and also just to make sure that we do accommodate some of those transactions that commercial banks will not usually fund, as we stand where there is a market failure. So fair value gain was also positive. We saw a huge improvement, especially on the JSE listed investment. So overall, we have reported a positive surplus, Chair and committee members. And then moving on to the next slide, which demonstrates the collection. So last year, our collection was sitting at 562. It was the highest in the history of the National Empowerment Fund. And the advantage or the beauty is that most of the collection came from the normal installments, which testament to the improvement in our loan book quality, as well as some of the measures that we've deployed to maximize collection from our investees. So over the last 5 years alone, as NEF, we have managed to collect 5 billion, and we endeavor to maintain that trajectory going forward. I'll pause there, Chair. You can continue. Thank you.
Thank you, CFO. So, Chair, in terms of looking internally within the organization over the last financial year, so the staff complement of the NEF, 57% of our staff is women, 43% is male. So we do consider the representation of various groups within our own manpower. We don't only impose this on our investees, but we ensure that representativity is also reflected within our own staff members. And we also focus on the wellness of the staff members, and we conduct various training for employees on wellness, as well as their personal development, including academic development. We offer bursary scheme for our staff members so that they can continue improving themselves in the education side. In terms of the audit, the audit of the NF, as the CFO has mentioned, it was conducted in terms of the GRAP standards and the PFMA. We currently have 4 subsidiaries that were consolidated, being a company called Search Tech, another one called Fusiami, Delso, and Nefcop. And we also had challenges with not receiving approvals from for under the PFME on these subsidiaries. But I'm happy to report that in the 2025 financial year, we have since received that approval, and it is available, is valid for the next 5 years. So we will not have any issues with the work that's being done in those subsidiaries appearing under irregular expenditure for non-compliance in our books going forward. So we remain a going concern as an organization, and our financial statements have been prepared as such, and we own each of our subsidiaries 100%. And in terms of growing, be it through partnerships, we have an ED fund that we have been running for the last 10 years. And this fund now is actually has been doing work where we raise funding, and we also support enterprises. And the work that we've been doing there, it is actually helping us in terms of the work that we are doing now, working with the government in actually incubating the transformation fund for the entire country. Now, in terms of the collaborations that we have and also the co-funding, we co-fund with other entities and we leverage funding. In terms of the funding initiatives that we mentioned, we did mention previously that the National Empowerment Fund, we not necessarily capitalized through the fiscus, but we do raise funding from other DFIs as well as the private entities. And that funding is not to support the operations of the organizations. It is specifically to invest in transformation projects. And since our inception, we've raised about 3 billion rand from 28 entities in the private and the public sector as partners. And we have leveraged approximately 9 billion rand. So this is the money that we actually leverage when we invest. For instance, the CFO mentioned the Busamed transaction. The NF has invested approximately 300 million rand in that transaction, but the private sector has invested over 3 billion rand in the transaction. So we managed to leverage more than 100% of what we invested as an organization, which is what we're saying, to say the strategy is to ensure that we pay the initial school fees, but we expand those programs, and that expansion comes through working with other enterprises, because as we de-risk projects, then they become attractive even to entities that have got higher risk appetites than the National Empowerment Fund. Just touching on our skills development and training program, we do have a program of training unemployed, particularly youth in the country, just to ensure that we play a role in reducing unemployment in the country. We target specific skills. I mentioned earlier the work that we're doing in the digital space. We're supporting young people within that space, and we ensure that the training that we provide is training that is aligned with the country's priorities, and also it's going to assist in alleviating the unemployment challenges that we have as a country. So we don't just train people for them to have qualifications. We do on-the-job training, and we also place those people within the companies that we've invested in. We ensure that each company has got a training program. And also we ensure that we raise funds from various partners in order to subsidize the stipends and the salaries of those people. And we've seen some of the people that they have managed to actually go and work overseas, and then they come back into the country with other skills. So we believe that these initiatives are assisting to ensure that we grow the capacity for the country and ensure that there is absorption of people into full-time employment on a long-term basis. So some of the partners that we work with when we do the training, just listed a number of them. We, for instance, work with the bank SETA, where we actually raise funding, and we actually use that funding to support the unemployed youth. And in this current year, we actually targeting about 280 of those people. I'll show the numbers for last year in the next slide. And we also focus on specific skills, like the training of chartered accountants, as well as training of attorneys through specific programs, because we believe that there is a need of ensuring that we develop these skills at grassroots level, particularly for people who come from areas that were not exposed to those kinds of careers in the past. And then in terms of some of the numbers that we started training last year, because we started with these programs when the new administration came, because the Minister Parkstow actually impressed upon us that we needed to make this one of the focus areas for us. So we actually, in terms of our rural and township program, we've created opportunities for 50 young people, that's graduates. We also worked with the BEE Commission, where we created opportunities for 10 young people, and those are being trained on the work that the BEE Commission is doing, which we believe that is an area that the country needs to develop expertise in, so that when it comes to the enforcement and also the measuring of impact in BEE, we do have sufficient manpower in the future. So it's an investment in terms of ensuring that the government can achieve its objectives. And then as an organization as well, in our head office and our regional offices, we absorbed an additional 10. This is in addition to the ones that we're already training. And we are embarking on a program where we're going to be working with TVET colleges. We're going to be targeting on specific expertise like plumbing and other technical expertise where the country doesn't have that kind of expertise. For instance, we've discovered through this that there is a shortage of welders in the country, and there are graduates that are studying towards those particular vocations in the TVET colleges. So the partnerships that we are developing will ensure that those people, they are trained, but we create partnerships, for instance, with the vehicle manufacturing OEMs and other entities that will absorb those people into employment. So we don't want to just train people. We train people with a path towards employment. Chair, before I conclude, I just wanted to touch on the Transformation Fund. The committee will be aware that this is the work that we've been working with the department on. But the department, I'm sure at the right time, will report to the committee in terms of the progress that's been made. But we do want to mention that the NEF has been working with the department in actually putting together the draft concept paper and also reviewing the comments that came through. We were very encouraged about the comments that came through on the Transformation Fund from various stakeholders, and those have since been taken into consideration in the revised concept document. And I think working with the department, as I said, the department will actually report as to where that is, I'm sure, in future meetings. So, Chair, this work has been very exciting for us because our colleagues have been part of the task team that developed the concept paper, and we participated in the stakeholder engagement. And we also reviewed some of the commentary that came. And also we continue working on this partnership, even leading to a point where it actually going to lead to the realization of this vision of having this fund within the economy. So currently there is a project management office that's been established to oversee the implementation. And we've also been working on the process of ensuring that we obtain the necessary approvals, including the National Credit Regulator, as well as the financial services licensing for the Transformation Fund. And we're also working on a strategy for mobilizing the capital. So also still on the Transformation Fund, Chair, finalizing the special purpose vehicle of the fund. The committee will be aware that there was actually discussions in ensuring that the fund is housed within an SPV, and we are actually ensuring that all the necessary work of ensuring that that process and then administrative aspects of it are concluded within reasonable time. If I can touch on our work on the SMME Township and Rural Development Program, we have interventions that are aimed at ensuring that we intervene in the rural and township space across the country. I think that is where most of the unemployment people reside, particularly in some of the provinces that have got big rural areas. We prioritize the funding of SMMEs, including those that are owned by women and the youth. And we ensure that within our aggregator model, we cluster the enterprises so that they can share infrastructure and they can actually leverage on the local supply chain integration programs that we come up as an organization. We've invested over 61 million rand in that program, which has supported more than 552 jobs, and 27% of the enterprises in that space are owned by women. And we've created about 333 jobs. And in terms of our outlook, we see this as one of those areas that we are actually going to increase the work that we are doing, because it assists with the spatial inclusion, poverty alleviation, SME growth, and also ensuring that there is alignment with the national development plans as well as the district development model of government. And we will continue broadening the access to rural financing instruments, including the support of youth-owned businesses, as well as supporting industrial hubs. On the tourism program, we do have a tourism transformation fund that we set up with the Department of Tourism. And this fund, we have actually invested in transactions worth more than 394 million rand across the country. Of that, we've disbursed 220 million rand. And this has created 1,227 jobs. And that includes 562 new jobs. And this has multiplier effect because we have not actually taken into consideration the jobs that we create and the support that is actually achieved through the SMMEs and other entities that are supported through each of the tourism businesses that we set up. Because we've seen that if we set up a tourism establishment in a rural area, it starts to create opportunities not only for the entrepreneurs we fund, but also within the communities and also the local entrepreneurs. So we believe that the tourism space is one of those areas that will assist us in ensuring that there's greater development impact. So on the corporate social investment, we invest in various CSI projects, which include projects within the education and the entrepreneurship space. We do health and wellness, as well as ensuring environmental sustainability. We supported over 20,000 beneficiaries. Those are the people that we touched through these initiatives. And we collaborate with various NGOs and municipalities, as well as other public institutions like the schools, in ensuring that we implement CSI initiatives. And our social and ethics committee oversees the work that we are doing in this particular space to ensure that it continues to align with good governance principles. In conclusion, Chair, we just want to thank the committee for the opportunity to present, and the NEF will continue to deliver on the mandate of financing and transformation, sustainable and inclusive growth. We did achieve 81% of our KPI, and also we have ensured that the organization is sustainable financially, and it is promising for us. We're encouraged by the collections that we've achieved last year, because there's an increase of 100 million rand if you compare with the previous year in terms of what we collected in the 2024-2025 financial year. It shows us that some of the strategic initiatives that we are putting in place to ensure that the businesses we finance are sustainable are starting to yield fruit. The number of businesses we funded continues to grow, sitting at 1,795, valued at around 15.6 billion rand. And the aim is to increase this. We believe that we can actually achieve more, and we're going to continue driving inclusive growth across all provinces in the country. Job creation and job sustainability is one of the key focus areas for our organization. And we believe that initiatives such as the Transformation Fund, the Tourism Transformation Fund, and other initiatives, they are going to assist the country.
You will have to wrap up now. I've thought you've been wrapping up because we've got other business of the committee. Please, if you can wrap up.
Thank you. That was my last slide. Thank you, Chair.
No, thank you very much, CEO. Can I now take hands from members of the committee? And you'll assist me in that order.
I will, Chair. Mr. Chance, Chair. Mr. Mdluli, Chair. Mdluli.
Yes, in that order.
Thank you, Chair. Thank you, CEO, and for your presentation. Just a couple of questions. It does seem to me that you are showing some positive signals, positive signs in terms of the performance of the entity. I have a couple of questions. For example, the 9.9 billion rand economic value added, how is that calculated? I know that there was an increase of 300 million rand in fair value in terms of your income statement, but there's a big difference between 300 million rand increase in fair value and the 9.9 value added. How is that measured? And then, do you have statistics on the varying sizes of your loans, and any sort of relationship between the size of the loan, the term of the loan, and the performance of that loan in terms of its impairments and collection ratio? And I'm asking that obviously because it does maybe have some relationship with the size of the business that you're funding. And so in terms of the life cycle, do you have any analysis of the life cycle of the businesses that you're funding, and where the sweet spot is in regard to performance of those loans connected to the stage of the life cycle the business is in? You mentioned Mint and Honey. We happened to visit Mint and Honey in Atlantis a few weeks ago. And I'm a bit skeptical, to be honest, of the number of jobs that you say were created, 154 jobs. When we got there, there was hardly anybody on site. They were busy, refurbishing the premises, and they did make statements to the effect that they were having cash flow problems. In fact, the Atlantis SEZ CEO told us that they were behind on their rent and that they were having to restructure their debt. So it may not all be as rosy as you make it out to be in this particular instance. And then two of the other examples, Emelachleni Tourism and Techno Libra, very distinctive, very different cost per jobs created. In the first one, I calculated 53,000 Rand per job created, and the other one, 140,000 cost per job created, which goes to the issue of the quality of the jobs that are being created through your interventions. And obviously, a job is better than no job, but it's interesting to me to get some insights into the quality of the jobs that are created in terms of not just the income that the person is earning, but also the time that those people are hopefully likely to be employed in those businesses. And then I have another question. Do you believe that you're fishing in the same pond as SEDFA, the Small Enterprise Development Finance Agency? And if so, do you find that you get applications from businesses that are also applying to SEDFA? And how do you decide, if you do, which one funds the business? And then the revised concept document from the Transformation Fund, it has been circulated in some circles, but I don't believe it's been published yet by the NEF. When will it be published? And then when will the board of the Transformation Fund be appointed? And will this board, has the composition of the board in terms of the ratio of executive, non-executive, private sector, government members has it been determined? Thank you, sir. Thanks, Chair.
Thank you, Chair. I assume that I'm next. Can I go ahead, Chair, with my questions?
Yes, you are next.
Okay, thanks. So the first question is a report states that the NEF achieved 81% of its KPIs in 2024-2025. Can you please explain which of the key targets were missed and why? Secondly, the NEF reports a net surplus of 433.3 million after a prior year loss. What are the main drivers of this turnaround, and to what extent are they recurring? The third question is the report attributes improved fair value and listed share gains. What portion of the surplus is from realized cash receipts versus unrealized fair value gains? Please provide a split of cash versus non-cash. The fourth question is the NEF reports a collection of 563 million, the highest in 10 years, and a collection ratio of 80%. What steps were taken to improve recoveries, and how sustainable are these collections given historic impairment levels? The other question is the impairment charge increase to prepare for a new impairment accounting standard. Can you please explain the methodology and quantify the additional provision that was recognized in 2024-2025? The second to last question, Chair, is the report lists a target impairment ratio of 30%. What is the current portfolio impairment ratio, and how does this compare to peer DFIs or the NEF's own risk appetite. The last question, Chair, is that the NEF states cash balances have been above 1 billion historically, but cash levels have decreased over time due to disbursements. What is the current unencumbered cash and the projected runway under base and stress scenarios? Thanks, Chair.
Chair, Mr. Gama and Dr. Kigaba raise their hands, Chair.
Thank you very much. I take it Chair wants me to go first. Can you hear me?
Yes, I can. We can hear you. Andre is assisting me. When you call your name in that order, please. Sorry.
Okay. No, thank you very much. Thank you very much to the presenters and for the presentation. I think it's quite an encouraging presentation in terms of the sets of issues that the National Empowerment Fund is dealing with. I'd like to note the improvements that are being made, profitability, funding, disbursements. I think is quite encouraging. What I'd like to know, just two things. There is a prevailing sentiment in the marketplace that the turnaround time in approving loans can take anything up to 4 months. Is there any truth to this? And are you taking any steps to make sure that your turnaround time can be improved and increased? You also talked about leveraging some of your loan funding with syndicated funding from other private sector partners. How do you do this? Do you make sure that when you get mezzanine loans from other entities that you do not subjugate your loans in favor of them to make sure that you continue on this trajectory where you are able to get back your money and improve on your loan book? Thank you very much.
Thank you, Chair. Just a related question to what Honorable Mjuli asked with regard to the impairment rate, as well as your risk appetite. We've been, and I hear what you are saying with regard to NEF raising funding from other DFIs. And we've been raising this issue as well in the committee. I remember we raised it very vehemently last year, about the NEF needing to be recapitalized in order to be able to undertake its mandate. Just three questions that are related to this. One is, to fulfill your mandate, what impairment rate do you require? Because currently, the 30% impairment rate does not seem to fit a DFI with a mandate such as you have. So what impairment rate do you need in order to fulfill your mandate? Secondly, now, that relates to your risk appetite. What impact does this have then on your risk appetite, so that you don't operate like a regular bank in terms of what you require from those you need to fund? And what does that have on the price of the deals that you you enter into with your clients, with your applicants. And thirdly, it does seem like your unencumbered cash is puts you at risk in terms of your going concern status. And I heard you saying that you are comfortable with regard to your going concern status, but we would worry because we've been raising the issue of recapitalizing the NEF, but your unencumbered cash seems to be quite low. So what is being done in that regard to ensure that the NEF is able to still continue fulfilling its mandate? Thank you.
Chair, there's no further hands, Chair.
Okay, if you can please respond.
Thank you, Chair. I will respond to some of the questions, and then I'll request Mr. Andy Lestimel and the CFO and other colleagues to come in. But, Chair, I think the committee is raising very pertinent issues. Maybe if I can start with the issue of the turnaround times that Honorable Gama raised. Indeed, that is a sentiment that we've also identified. In fact, we've been working on a strategy approach with our new board now, and what's one of the issues that they are focusing on. So we are actually working on strategies to ensure that we improve this. And those are going to include the digitization of some of our processes and ensuring that we've got specific people that are focusing at the early stages of applications, because we lose a lot of time with applications that are not compliant with the requirements. So there's a back and forth that happens with clients in the initial stages of applications. And that time can be frustrating to clients. So we are coming up with initiatives to ensure that we manage that. In terms of the private sector funding, indeed, most of the private sector partners we speak to, what they ask for is that our funding must be subordinated to them. So it does take quite a bit of time to negotiate, because we also push back, because we wouldn't want the government money to be the only one that is at risk. So we end up in compromise situations whereby we would agree percentages, a certain percentage of our funding be at risk, and also a certain percentage of their funding. But the reality is that certain of the funders, they're not prepared to take certain risks. So we then, as a development finance institution, have to make funding available in order to take that risk. I must say, Chair, the DTIC does assist us with certain types of concessionary funding that ensures in certain instances that we can actually come up with products that will even be interest-free for the clients, just to try and manage the interest rates between the private and the public sector funding. But fundraising and also ensuring that with concessionary finance is an ongoing part of what the business that we do. Indeed, the 30% impairment rate is a challenge, because the balancing act that we have to continuously do is to ensure that we fund in a way that achieves the mandate, but also that ensures sustainability, considering that there is no capitalization that comes from the fiscus to the NEF. So the money that we have is the money that we need to preserve to ensure that we circulate it in the economy. And hence, we then end up putting the money in various bucketing portions, that's high risk, but we also ensure that there's a portion that we utilize to take high risk and we fund certain types of projects. It does affect the ability of capital for certain projects,
but it's something that we manage. I think the CFO, I'm sure, will touch on that later on. It does impact on the risk appetite, and also, I guess that's an issue for us. The reason why I'm saying we are in a better position, maybe it's not necessarily a comfortable position, but considering where we come from as an organization, the NEF is a growing organization. We are in a position now where we can actually map out a going concern period of up to 18 months or 2 years. But if there was an ideal situation, we would actually have a going concern situation of a longer period, and then that would make things to be comfortable for us. So I do take the point that Honorable Dr. Kigaba is making on that. And lastly, Chair, before I actually hand over to the other colleagues, on the issue of whether we are fishing on the same pond as CETFA. So the mandate of CETFA is, I know they are reviewing their thresholds. They fund up to around 15 million. The NEF, we fund up to around 75 million. And that's one. There is a difference in terms of the quantums. That also talks to the nature and the sizes of businesses that we do. We do smaller businesses, but in the large main, it is CEFA that plays in that particular area. And the reason why we also fund there is that even with CEFA being part of the DFI space and the NEF being part, we're not fulfilling even 30% of the needs of the country. So there is a need to ensure that the resources of the country are actually utilized such that there is impact within the economy. So that is on that particular one, Chair. Maybe let me pause there and allow Andy and the CFO to come in, Chair.
Thank you, CEO, and thank you to the members for the questions. Regarding the preparation work that is happening with the Transformation Fund, indeed, Member Chance, we have been hard at work to ensure that we have a decent balance regarding our board composition and all the subcommittees that will be supporting that board. This week, one of our deliverables is to make a communication to the minister to approve the way in which we go to market. The aim is that the board in principle should be in place by the last quarter of this financial year, so that whatever planning is required, they are in place to give the guidance. But it will be, call it an equitable mix of members from the private sector, the NEF, and some public sector representation. The aim is for accountable transparency. As we've always said, this project is a co-creation of the of an aggregated fund. It's not just a government program. With respect to the Mint and Honey project, we do note, we are well aware that the business is in an expansion phase. So the biggest part of the work that happens there regarding our funding has been to, build or call it invest in the expansion of its facilities, the mechanization, etc. So they're currently in that phase. The restructuring of loans, I think, has to do with the interruption of business whilst the construction is happening. Once that is concluded, the other existing funders, which I believe Standard Bank is one of the funders, obviously would have to make consideration as to how that funding. But ours, we haven't yet started levying installments because it is during this construction phase, Chair. In terms of the improvement of recoveries, so we put in place a new portfolio management strategy, and the aim was for us to be proactive in a number of areas, but chiefly amongst the collection rates. We've also put in place an outbound call center to make contact with clients who see their first defaults. That has led to quite an improvement because then people do respond in kind to catch up with their missed installments where they can. Obviously, we are a development funding institution, so we're a lot more patient with respect to how we treat our clients. It's not as, call it, as punitive as some of the commercial lenders. On the loan size, we really have been doing quite an assessment of what the sweet spot is, and funny enough, I think just as many of the smaller businesses as those that take out the bigger loans succeed or get into same levels of distress. I think what is more important is the sectors that they're playing in, whether they're in that growth phase such that they can secure those markets and ensure sustainability, but also how the businesses are capitalized. So if a business is carrying too much debt, even if with a 1 million loan, they can get into trouble as much as with a 40 million rand loan. So the aim is for us to ensure that we make available concessionary funding where there is quite a bit of debt, to ensure that we bring down that effective cost of lending. And where possible, of course, we'll take collateral where on the assets that we invest in. So not so much on people's homes, etc., but more on the assets that we invest in, so that the business is able to provide some level of security regarding their funding. I think we've touched on the risk appetite and how the impairment rate does impact how much risk we can take. You would have heard the CFO talk to the different classification of loans and so forth. So our aim is that whenever we use on-balance sheet funding, we are a bit risk averse. But what you would see is that 66% of our funding in any given year is concessionary loans in lieu of the partnerships that we have. And those, we do take a lot more risk, Chair, to ensure that we are able to fulfill our mandate. I think I'll stop there, Chair, and hand over to the CFO regarding, maybe on the calculation of the economic value added, Member Chance. I think the aim there is to reflect and represent the aggregate revenues that our businesses earn in any given year. So it's not just in businesses we have funded this year, but it's businesses that we have been funding in previous years as well. And as the portfolio grows, we effectively are saying, what was the opening revenue from the last year? What is the revenue of the businesses in the current year? And what is that delta? And that delta, we reflect that as the additional value added to activities in the economy. Thank you, Chair.
Thank you. Andile, I'll start with the change in surplus. So overall, our revenue sources, be it interest on investment, it improved. Dividends from listed and unlisted improved year on year, as well as the interest on cash surplus. Same with the OPEX. I think there was a containment. But the fair value on listed is the one that really improved our surplus. And the reason being is the quantum, because if you look at the improvement on interest on investment of I think almost 10%. So if the quantum was huge, if we were sitting at a loan portfolio of more than 20 billion, so the 10%, you're looking at more than 2 billion. But the unfortunate part is that on the core investment, our quantum is not enough, such that when there is a jump of 10%, that can translate into a huge impact on the surplus. So then, also to add on some of the mechanism we've deployed to improve recoveries is that we focused on strengthening the front line on our investment value chain to make sure that the transactions that we bring in our portfolio, they will assist to improve our portfolio, but at the same time, we still meet our developmental mandate around transformation and jobs. And we also added, for example, the outbound call center, wherein the clients that default, especially initial installments, we call them and request them to make an arrangement. So those are some of the things that we did to improve our collection. And then coming to the impairment overall, I think our impairment is a challenge. We always try to make sure that we balance it, but the challenge is it's mainly the quantum, because if you're looking at, for example, impairment of 30% on a loan portfolio of 5 billion, in terms of the impact, is not a lot. But if we're looking at an annual disbursement of 6 billion, and then you're saying you are providing 30% of that as an impairment, is going to have a huge impact in terms of the risk appetite and a number of emerging entrepreneurs that we can fund, which otherwise would not have been funded by the commercial banks. So what I'm saying is that with the amount that is available to invest, we try to be very careful, given that it's not a huge quantum. But if we can get sufficient capital to invest, I think that 30% will make a huge difference. And then what we did in preparation for the changes in the accounting standard is that we accelerated some of our impairment. For example, where we know that the transactions are in trouble, but we have not yet, for example, raised some of those installments, we then accelerated the impairment so that as we transition to the new accounting standard, at least some of those transactions would have been considered just to reduce the magnitude. For example, some entities, when they transition from the old to the new accounting standard, the impairment jumped by around 100%. So those are some of the things that we did in preparation for that. And then I will agree with the honorable members that our unencumbered cash balance of 430 million is not sufficient. But what we're doing in the absence of the capitalization is that we try and make sure that we manage it such that we can still be able to be a going concern. But the effect is that the impact on the economy is not as we envisioned, simply because we want to make sure that we manage our limited unencumbered balances. And then I also agree that on the loan syndicate, it's important that as NEF, we remain a senior lender. So that's what we do in most instances. But the only downside is that there are good equity investments that we should have funded as NEF in order for us to earn a dividend, get those legacy investments that will be able to subsidize the operation of the organization. But unfortunately, we usually tend to focus on the term loan so that we can get these repayments earlier and then recycle the money accordingly. But if we had sufficient capital, we would have made some of those equity investments that later on would have yielded the results. Thank you, Chair.
And lastly, there's one question on the cost per job. So on Technolibra versus Malangi. So what we do when we create jobs, we create training jobs, and then we create jobs, permanent jobs. And when you create permanent jobs, there's an issue of minimum wage that you need to consider, and the fact that the experience is not at the same level. So the cost per job will be different in business that trains young people and also trains trainees. So the cost there will be much lower than people who've got experience. But at the same time, you are actually developing a very specialized skill that will ensure that those people might end up being able to run their own digital businesses in the long term. So it is an issue of the applicable legislation and also the levels of the people that get employed by the various businesses. Chair. Thank you.
Thank you very much. Now, I would like to get your comment, because we do receive complaints from time to time that the NEF does not have enough or a number of deal makers. Why have you considered using artificial intelligence to try and cover the space? Because I think we are advancing towards that kind of development. If I can just get your comment on that. And secondly, the other complaint we receive is that you are almost more have become like a bank, you know. The kind of surety that you look for from individuals is almost it's the same. Why is that? If you can just comment, and because those are some of the issues that when we interact with some of those that are trying to put applications across your entity, we have a lot of those issues that are being raised with regard to your own internal processes. And I think colleagues have really asked a lot of questions around the impairment and whether or not that's a sufficient percentage, given the nature of the business and the people that you are dealing with, so that we can be taken into confidence. Then you made a comment about females being 57%, but I didn't get a sense, is this at EXCO level or is it just at the institutional level? If not, can you just take us into confidence, know at what level is that particular percentage that you are talking about? So, yeah, just on my side, those are the issues I think colleagues have covered me on other areas.
Thank you, Chair.
CEO, if I may come in on the security question.
Okay.
Thank you. Good afternoon to the committee. My name is Karishma Govender. I am the General Counsel at the NEF. To talk about the issue of security and own contribution, I think there is a lot that we do to make sure that clients are actually given the opportunity to raise funding without the need for huge amounts of collateral. It was previously mentioned, and it does link directly to our level of impairments, the fact that we sometimes, sit with a higher rate of impairment and the inability to collect on some of these loans because of the fact that we don't take those huge amounts of security. So if there is no tangible security, such as properties that we can take mortgage bonds over, etc., we still do fund because we are a cash flow lender. So we would look at what the business's potential is in terms of the cash flow. We would look at areas to mitigate. So we would also look at aspects such as what post-investment support can we give the client to make sure that we limit the risk so that the cash flows are stronger, such as mentorship, financial assistance in terms of financial management, and even access to markets, so that we mitigate the risk on the transaction itself, which would then generate its ability to pay us back. And also what differentiates us quite significantly from the bank's strict requirements is the fact that we are very flexible in terms of the own contribution requirement. So there's no hard percentage that is required in terms of own contribution. And where clients have very limited own contribution, or even sometimes none at all, we try to make the transaction work with that under the circumstances. It is a higher level of risk for us because we do feel that own contribution does add to commitment of the entrepreneur, but the NEF does fund those investees and we don't turn them away because of the lack of collateral or own contribution. So I definitely think we open up the access to funding for a lot of clients that would be rejected by the banks. Thank you, Chair.
If I may come in, Chair, on the other issues, firstly, on the issue of the AI and the staff complement. Indeed, Chair, our staff complement, because of the number of applications that we receive, we receive quite huge numbers of applications. And it has actually necessitated us to explore AI and artificial intelligence. In fact, this is one of the first things that our Minister Parkstow raised with us to say we do need to digitize. And it was not only for us as the NEF, as the DTIC family. So we've been working on developing AI tools that will assist us. We will be launching, for instance, our online application tool over the next couple of months, which has been under development for the last year. So we're definitely embracing AI and artificial intelligence, and it is going to be part of our business going forward. Now, when it comes to the levels of impairments, Chair, we fully agree with the committee. The impairment should ideally be, the appetite should be at a higher level. But because of the reality of our situation and where we raise funding, we have to manage the risk levels in line with what it would take for us to be sustainable with the resources that we have. But we are working very hard to ensure that we raise concessionary funding, because when we raise more of those funds, then it enables us to take more risk. So it actually also goes to the crux of development finance, Chair, because you cannot support certain businesses unless you have access to equity or grant funding. So we fully agree with what the committee is saying there. On the issue of the female composition of our staff, the 57% is staff across the board, Chair. We are sitting at around 50% at MENCO level. And then at executive level, it was much lower than that. But over the last year, I think we've been filling positions. For instance, Karishma, who's just spoken here, is one of the new colleagues that have joined our EXCO. There's another colleague, female colleague. And we're looking at the opportunities which are available so that we actually increase our women representation at the most senior level within the organization. And that's something that our board is watching very carefully, and they have actually set us specific requirements in terms of that composition. Thank you, Chair.
And thank you very much, CEO. Are there no further hands or questions from members so that we can release the colleagues and get on to our third item?
There's no further hands or any hands raised, Chair.
Okay. Thank you very much, colleagues. We'll continue to engage to look closer into some of the issues, and we'll continue going on the ground to visit also some of the projects that you fund so that we have a sense. I think Member Chance was correct that we went to one of the projects in Atlantis. Those numbers are physically not there, including the space. So it's one of the things that you need to look at. So we hope that in other projects you will try and maybe get much more details or clarity with regard to the numbers. But otherwise, thank you very much for the presentation, and we'll continue interacting with yourselves. You are all released as we continue with the business of the committee. Thank you very much.
Thank you, Chair.
Thank you, Chair. Just 2 more minutes for members, then we can proceed. Can we proceed? Andre?
Chair, we received the request from Mr. Chance to brief the committee on the proposal we may want the committee to consider, Chair.
Yes,
So,
Mr. Chan. Yes, Mr. Chance, over to you. Just high
Thank you.
level briefing. Okay.
Yeah, very high level. Thank you very much, Chairperson. Members, we mostly are going to be preparing for a debate on Friday, a mini plenary, considering a subject for discussion from the Honourable Ghana on the gambling crisis that we have in this country. And I think that the members will be seized with the growing concern that is expressed throughout many corners of society, from even the retailers who are seeing gambling spend eating into their revenues, to the National Responsible Gambling Foundation, who are concerned about the huge amounts of addiction that we're seeing. So I had a discussion with the chairperson on Monday about a proposal which I would like to circulate, which I have circulated to him. And I have a document which I can't share. Maybe somebody, maybe Andre could share the document that I've circulated to him yesterday. But essentially, it's a memorandum which proposes that the committee takes the initiative with the required legislation that needs to be put into place urgently to properly regulate the gambling and betting sector. As we know, the gross gambling revenue has rocketed to 75 billion rand, and the vast majority of that money is being earned by online betting and gambling sites, not by traditional casinos and limited payout machines and so on. And everywhere you turn, you see advertising and sponsorships. Every other billboard, you walk through the airport, you climb up the escalators, you see billboards, and basically it's becoming an epidemic. Now, as we know, again, the 2008 National Gambling Amendment Act, which was meant to deal with interactive gambling, was never promulgated, was never implemented. So what that's led to is a explosion of unregulated gambling and betting, which is causing havoc amongst families and particularly students that are using some of their NSFAS money. Up to 27% of grant recipients are using their money to spend on gambling. So it really is a serious problem. Now, I have a private members bill, which was circulated for comments about a year ago. Can you believe it? And we received some very valuable responses. And the private members bill is called the Remote Gambling Bill, which aims to fill the gap left by the fact that the 28 bill was never promulgated. But as we all know, private members' bills suffer from political contestation because of the fact that they are in the name of an individual member. And what I propose to Honourable Chairperson, and is written up in this memorandum, is that instead of private members' bill, the committee should generate its own bill as a committee bill, which would be a combination of the updated 2008 Act and elements of the private members bill that I've written, taking into account many of the considerations and submissions that we've received from the public, and that the committee shows determination that we are not just sitting in our offices without any real commitment to assisting social ill, but we're taking the initiative to go ahead with a legislative framework which will regulate gambling in general, not just online gambling, but all gambling. So that's the proposal, and I want to suggest that the committee provides itself or gives itself time initially to call in the parliamentary legal advisors to advise on how we may go about this proposal from a process point of view, either amending or repealing the 2008 Act and creating a new act, which would then be in the name of the committee. And I think this is the quickest way of doing things. One of the things that was mentioned by the submissions was that it's important to to amend the primary legislation rather than have another piece of legislation which will just add complications, which is the reason why we want to go back to the Amendment Act. And also review the 2018 Act, which went to the Mediation Committee, and as we know, was withdrawn. We never debated the report from the Mediation Committee. So we need to consolidate all these different pieces of legislation into something that is digestible and understandable and easily implemented. So that's the proposal, Chair, that we invite the Parliamentary Legal Services to come and have a meeting with us at some point. It doesn't have to be a physical meeting, it can be a virtual meeting. And that the committee adopts a resolution that we will, as a committee, endeavour to take the initiative with a committee bill to amend the Gambling Act and to do what is necessary to protect the public from further financial losses. Thank you, Chair. Chair?
We are missing you, Member Chance.
Mr. Chance has completed his input, Chair.
I've completed my input.
Oh, thank you very much. Yeah, sorry. I think I lost a bit of network went towards the end. Okay,
So
members.
did you get the last bit where I was wanting a committee resolution? Did you get that bit, Chair?
No, I heard you. I heard that. Yes. Can I just get a comment from members? So on the approach and your thoughts on the subject. You'll help me with the hands, Andre.
I will do so, Chair. Chair, I don't know if I'm intervening.
Everybody is stunned to silence.
Anyway. Okay.
Chair, through you, Chair, may I make a proposal, Chair, if it's an order, Chair?
Yes, please do.
Chair, there are a number of processes that must be undertaken before a committee can undertake do a committee bill. One of the processes is that we must get permission from the Speaker or the House to initiate such a process. So, given the fact that we only received it yesterday and members may not have looked at the proposal that Mr. Chance has made, to afford the members opportunity to look at the document and maybe at a meeting to determine whether the committee are in favor of such a process or not, rather than concluding on a proposal now, Chair. I'm just seeing that nobody raised their hands. Maybe members didn't look at the content and may want to consult before the committee makes a decision to proceed with a committee bill. And then the rules will guide the process, and then we can get in the legislative arm of our legal advice office to assist us if the committee so choose to proceed with the committee bill.
No, thank you very much. I think that's helpful, because I wanted to suggest that we probably, now that we've been able to table this idea, what we do, we then request you to consult the legal department just on the processes, pros and cons, and then in our next meeting we then have a full deliberation with regard to the approach. Then that's when we will take a decision. But for now, we note, and then legal work gets to be done so that we are fully briefed. And then when we come back, you will then have to come in and give us a process and give us examples of whether or not this was done in the past and so on and so on. And then we take it from there. Is that acceptable, Member Chance?
Yes, it is acceptable. So just to confirm, at our next meeting, hopefully everybody will have had a chance to read my memorandum, and then the Secretary, Andre, will give us a step-by-step process as to what we need to do to initiate this if the committee agrees that this is the way we want to go.
Yes, I think that's correct. Are you fine, Andre?
No, that should be in order, Chair. We'll prepare a briefing doc for that.
Thank you very much. Do we have minutes to approve?
We didn't schedule any minutes now, Chair.
No problem. Then it means we will have an early lunch. Thank you very much. The meeting is adjourned. Thank you very much, members of the committee. The meeting is adjourned.
Thank you, Chair.
Okay, thank you, Chair.
Recording stopped.